Good morning, everybody. Good evening, good afternoon, depending on wherever in the world you are joining us from. Welcome back. It's a new week, new trading opportunities. You can see I'm a little bit by myself here today. Jonatan has fallen sadly a bit sick, might be joining us. I told him to get a little bit rest first. I think he's eager to join nonetheless, because we are seeing some crazy moves already this morning on the markets, and we'll dive right into the action after this short intro. So let's see first, who do we have with us here tomorrow? Of course, we have Henry with us. Welcome, Henry. I think I need to move my chair a little bit, to this side. But I'm completely in my microphone. We have Henry here with us. Good morning, Henry. We have Luis, as always, with us. We have Toussaint, I hope I'm pronouncing that correctly, with us. We have Calcom with us. Good afternoon. And we have Shahid with us. We have Sir Lancelot. That's an awesome name, by the way, with us. We have Abdullah with us, and we have Just Fun. This is how it's pronounced correctly. Also with us. Welcome, everybody. Welcome to today's show. Yeah, I said it already in the intro of today's video, of today's live stream. We are seeing some really quite significant moves. That is, at least for an early session here on a Monday morning. And I think all that was kind of initiated by a forecast by Morgan Stanley, because Morgan Stanley, for those of you who do not know, Morgan Stanley, one of the larger investment banks of this world, says it is expecting until 2026 a drop of 9% in the US dollar, on the presumption that the Fed is going to cut interest rates by 175 basis points, so 1.75%. And I want to go really through this, because it's really some dynamite, also in expectation. If you're trading any US dollar pair, for example, euro dollar, this will probably greatly affect you. I know there are some others that also jumped on that train and got some news out talking with negative forecast for the US dollar, so a weaker US dollar. So let's maybe quickly go through this, and then we kind of can try to translate it how we as traders should today behave in a market like this, because it not only affects, of course, currency pairs, it also has a great effect on gold. We saw a large move on gold already, basically jumped up from 3,300 all the way up to 3,356, where we are trading right now. So Morgan Stanley expect the US dollar to fall around 9% by the middle of next year, driving by slowing US economic growth and aggressive Federal Reserve rate cuts. That's kind of interesting. Slowing economic growth. Yeah, we have negative GDP currently in the USA. So by definition, we are in somewhat a recession. So obviously, Morgan Stanley, through all the tariffs that were introduced by Donald Trump, expect slower growth. Although, the discussion about tariffs, of course, is a whole different one at the moment, again, due to Donald Trump being stopped by the court. In a note dated May 31st, via Bloomberg, gated strategists led by Matthew Hornbach said the US dollar could reach levels last seen during the COVID-19 pandemic, as financial markets shift into a new phase. That is important, marked by steeper yield curves and a sustained downtrend in the greenback. Now, this steeper yield curve is something you might have had LJ and me talking about a lot already when we are talking about a possible trade in dollar yen, which I actually entered also last week. More on that later. So what do they expect here in detail? First of all, they expect that the euro would be rising to 125 from 113. We are trading today already at 114.22. So Of course, that had an effect already on the exchange rate of euro-dollar, but that is quite a slump. British pound, analog to West, climbing to 145 from 135. Japanese yen, strengthening to 130, and this is very much aligned with the analysis that I did last week. If you were on the live stream last week, I think I talked about my fair value analysis of dollar yen, where I said it should be trading actually according to my yield curve models at around 125 to 130. This is the fair value according to my yield curve model. So kind of interesting that this is backed up by somebody like Morgan Stanley now as well. US Treasury yields to hit 4% by end of 2025 before falling sharply as Fed cuts rates by 175 basis points next year. Of course, if the Fed cuts the interest rates, the yields are going down as well. So Morgan Stanley joins other major institutions, including JP Morgan, in turning bearish on the dollar amid persistent trade tensions under President Trump. The euro, yen, and Swiss franc are seen as safe haven rivals. Yeah, that's interesting too. Like safe haven and euro and yen is something you do not hear very often. Yen actually more than euro, but euro not the classic safe haven currency. That actually would have been more the Swiss francs, in my opinion, at least from my experience. So they are more most likely, of course, to benefit from if that happens really. So let's jump here into the charts and have a look at what is happening there currently. And give me a second. I need to switch over to my other charts, which is this one. I think this one. Yeah, this looks correct. And then edit again. All right, so this one, I'm not looking at euro dollar, but you can see already this is a Renko chart for those of you who do not know Renko charts. So each box you see here, for example, the top left is a price movement of $1. So the chart only paints new if the price moves. This is a trading system that I'm actively testing right now. If we have some time, I can talk a little bit about this one later as well. But for now, we want to have a look more at classic charts, primarily. Yeah, the US dollar index, which now has fallen below 100 once again. So it seems like if you want to look at it really just, you know, from the eyes of a chart analyst, is quite interesting what is happening there at the moment. I see Jonatan is there in the background as well. So feel free, Jonatan, to throw in a comment if you want to at any time. Other than that, man, get some rest, really. I just had this a couple of months ago that I didn't take my rest when sick, and when you are walking around with a cold with a flu for an eternity. So what we see here, in my opinion, in the US dollar index, and then taking the US dollar index now as an example, you might as well translate this, of course, to anything else. Like if you prefer looking at euro dollar, for example, which makes up like 65% of the dollar index as well. Anyway, already you might do that as well. And what we see here, well, maybe you want to tell me, guys, what do you see here? If I show you this chart, do you see like a sideways structure? Do you see a break of market structure, a downtrend? Let me know, like, your opinions about it. It's not just me telling you what I see here, especially with a macro background, but like if we have a look at the situation right now from a pure technical point of view, what do you guys see? How would you approach what you just heard when it comes to forecasting a US dollar weakness, or maybe you think it's going to be the opposite, US dollar strength? How can you translate this into techno analysis? So Henry is saying a breakdown of a distribution range, which is actually exactly what I was thinking. Now, bear in mind, this is like not an exact science, no, but we could say, like, for example, something like this, that we had something like a sideways range, I want to call it. I think we need to do this a little bit more narrow. So maybe let's put it like this, where the market, where the US dollar was kind of consolidating, didn't really know the direction. This has been going on ever since 2023. So when we started this new cycle of a more bullish momentum in risk on assets, the US dollar kind of went sideways, although, of course, it's a large sideways range. And I agree here very much with Henry. What we see at the moment is that we have gotten out of this distribution range, and we are now seeing actually what I think by the textbook could be defined as a declining market, as a downtrending markets, because we had a series of lower highs and we had a series of lower lows. I think this is very neat in this chart, actually. You could add this one, of course, as well, too, as a structure. Like I say, it's not a scientific approach. It's more like a approach that you see. And this downtrend combined with the fact that we weren't able to recapture this area of, well, here it's 189. I would more set this maybe to 100, actually. Prices are attracted by round numbers. So we weren't able to recapture this, specifically last week, Tuesday, where the market tried to break over it, but didn't manage to close over it. It's very likely that we're going to see a continuation of the pattern if you are somebody that wants to follow the trend more. And lower lows at the ends of sideways. Yeah, exactly. Absolutely. This is what I'm saying here. So by the logic of it, what we could expect, and I'm saying could expect, always remember this is not like hard science. This is trying to forecast patterns that are likely to emerge on what we are currently see on the chart. Of course, we could see a re-break also, especially, I mean, you could probably expect that Donald Trump might be talking or might be addressing this maybe today and saying something like, because he's known to be in, let's call him in US dollar enthusiast. He wants the US dollar to remain the strongest currency in the world, the currency everybody wants to have in their portfolios. So it's very likely, in my opinion, that today we are going to hear him addressing this. Maybe he's going to call it fake news. Maybe he's going to make some valid comments about it. So there could be, as we go forward today, a little bit of volatility caused by this. So you might be careful, actually, if you engage in swing trading or day trading positions today in US dollar terms. But of course, it's attractive to do that. So going forward, the most typical thing we could see now is that we form somewhere a new lower low, and we can get in more details, of course, where that could be, and then see like a structure like this roughly emerging, right? And maybe I close this one when it's better to see. So the next thing we could now do is, or at least what I like to do in situations like this, I like to look at retracement levels. So draw a Fibonacci, don't draw it all the way at the wick. I like to stick to the candles to see if we have like zones matching up. What is interesting here already at first sight is that, I don't know if this is very well to see on the small screen for you, that when this down move started, we had the large major bounce to the upside. We had exactly at the 61.8 or 0.618 Fibonacci retracement. This is something you see very often. It retraced all the way to the 0.5 and then continued down. And it's interesting to see now if we really want to follow this downtrend pattern now, we need to overcome or undercome in this case, actually, this 61.8 pattern. And then the way, in my opinion, is all the way free to the next zone, which would be here at 94.58. So this is like the kind of structure I'm betting right now, not with spot positions as a matter of fact, but with positions in options again. So typically what I like to do here, I would, now again, I do this with euro dollar, but to simplify things a little bit, my God, my loudspeaker is so high here. I need to turn it down a little bit. I would try to sell some calls, maybe with strike prices up here at 102. Now I would need to translate this obviously to euro dollar in this case. But for me, very clean break of structure. The next thing I would like to see is really a good close about below the 61.8 Fibonacci level, and then for me it's basically a self-fulfilling discovery. Very interesting trade. We see that reflected also, of course, again in euro dollar. In dollar yen. As I said last week, I was talking, and LJ also were talking about this a lot, all stemming from our idea of the Japanese yields that have risen quite a while. As I said, I did an analysis there. Let's see, maybe I can share this analysis later on the Discord as well. Might be interesting for you guys as well. Where I said the fair value of dollar yen should be somewhere in the vicinity of 125 to 130 at the moment. If we look at the next 6 months, that does not mean that we immediately collapse to that value, but it's going to be probably a gradual decline. And the movement we saw yesterday, my entry was by far not optimal, by the way, into this position, but it finally develops a little bit into my direction here. We see the same structure that we actually see on the dollar yen index again here, and this is the beauty of analyzing the markets. If you want to go with the trade momentum, that you really just need to identify the market structure. And again, here it's a series of lower lows and lower highs. Well, this technically could have been a break of structure already, but as I said, it's not a science. It's for general view of a market. This was a bit a break of structure too, but this is what we have the support bands here for, because we failed to go over the support. These support bands were deflected by then again. So technically we are somewhat in a downtrend there still, although like from a technical point of view, in my opinion, it's not as super clear as it was as it is for the US dollar index. But that is to be accepted. Euro dollar, of course, the opposite move, also going quite up today, where you have a series of higher highs and higher lows. Yeah, because it's euro dollar and not dollar euro, of course. So really quite some interesting times there that we are seeing at the moment. I'm very sure we have later on at 1 p.m. US time, I think it is, Jerome Paul also giving a speech, not on this matter. I think it's he's talking somewhere at a university or something, but would be, of course, interesting also to see if he is going to talk about these moves that we are seeing today, although he's probably more going to focus on the economic picture, especially the inflation rate there. We have Rain BFX $200 hopefully left to finish my 100K bootcamp. Congratulations, man. But please don't stumble on the finishing line. Is that like the whole evaluation phase or the first part of the evaluation phase you have finished there? Good morning, Fabian. Good to see you as well. Now, you guys might know that we also have a trading competition at the moment, and I want to quickly log into my account. I haven't participated in the trading competition. I wanted to, but I actually took some time off last week from Thursday to Sunday, because I also thought I'm going to get sick, but I want to have a quick look together with you right now how the trading competition is going. And where is it? I think this one here. Yeah, this must be it. So trading competition going at the moment, actually ending already in 22 hours at a duration of 6 days. And let's have a look how things are at the moment. So we have hung in front with, wow, $8,100. That's quite an achievement. Ramilio from whatever, how to pronounce that, from Brazil, I suppose 6,300 in front, closely followed by Turin with 6,240. Still 22 hours left, so plenty of time still to get into this one top 100. And remember, first place gets a 60K high stakes account all the way down to the 10th place high stakes account. Then we have place 11 to 20K bootcamps accounts. And even if you end up in place, let's say 75, you still get $5 of hub credits. So very nice. I wonder, yeah, there's another one coming up that is starting actually in 46 hours. So if you didn't participate in the current one, if you're not one of the 20,000 that are currently trading in that one, you might want to take the time to register here for the new one that starts in roughly 2 days from now. So that would be on Wednesday. And you can see we have already 7,900 from 20,000 possible participants that are within, that are going to take part in the trading competition. So don't miss out. It's for free, totally for free. And yeah, nice. And I didn't add my screen. My God, guys. So very quickly here again, classic mistake. And this is because you used to be able to do that with one mouse click. Now you always need 2 mouse click. So here we are again. These are the people that are currently leading the trading competition. And if you haven't participated in this one, or maybe it didn't go in a way that you wanted it to go, there's another one coming up starting in 46 hours. So on Wednesday, where you can again win great prizes. The first 100s again, I suppose, are going to win prizes. You can see that here. First winner is going to win a $60,000 high stakes account all the way down to place 100, where you get $5 for the trade the pool hub. Very exciting, seeing some really, really cool results, in my opinion. And it's the perfect opportunity, you know, if you're maybe unsure at the moment, should I go and buy an evaluation account, a bootcamp account, or a high stakes account at the moment, if you want to test your trading strategy in kind of like a contest, this is a way to go. As I said, it's totally free. Go that. Also, make sure, please, to leave us a like and subscribe to the channel. I wonder how many likes we actually have. I think I have to have a look here quickly on my mobile phone. And put it. How many likes do we have? Let's see. 42 likes only. Come on, guys. I want us to get at least to 100 likes until 11:30. So in the next half hour, that would be awesome. That also always attracts more audience to the channel, and the more the merrier, the better we can have a discussion about trading here. Let me switch back to my charts, and then we can talk about some stuff more in detail. And remember to edit. Oh, wow. 8K on a 10 account. Yeah, that is crazy, really. I'm actually very sure, because you said, imagine it was a 100K account, that you probably would not trade a 100K account or even a 10K account like this. Of course, like in contests like this, people tend to be a little bit aggressive, which is okay, you know, to kind of test the limits without needing to risk your own money. I think that's totally okay. As a matter of fact, if you like are trading on a high stakes account, these are also toned more to risking more, which is okay. And we had Russell also saying here loss was about 1%, which is okay. Gains were around 3%. This is awesome. This is a risk to reward of 1, 2, 3. So everything done correctly. And even like if you do, I mean, we are talking about a week of trading, doing 2% gain in a week. That is insane already. You know, we always have to keep in the back of our heads, what do the 1% of this trading world do, which are specialized hedge funds. And like the top 1% of hedge funds usually make around 14 to 15% per year. So we're talking about what, like something like 1.2, 1.3, 1.4% per month. So this is kind of the aim you should realistically have. So anything above that, of course, with a good risk management underlying that, puts you already really up there in the top 1%. Of course, if you earn 2%, but at one point you had a drawdown of 25%, that is something that is not considered as very well. 2.1% up for the contest, 100 more for the 5K is high stakes account. So also on the finishing line there as well. I want to have a little look this morning at gold. Why gold? Because first of all, it's something that you guys task me with trading. And as you might know, I've been working for a while now on a trading system when it comes to gold, because I cannot sit the whole day in front of the monitors and only trade golds. A lot of other things that I need to trade and pay attention to, my option portfolio primarily, and other things that I'm invested in that eat up time in meeting. So what I did here is that I, in the first step, applied the strategy that I like to trade on cryptocurrencies, which is a contrarian strategy. Contrarian strategy means that you try to pick these highs and lows and then bet on the market reversing the direction. The problem with those contrarian strategies is always if the market starts moving a lot, like for example, we are seeing usually in gold, you are very quickly and very often stopped out of your position. So you want kind of choppy markets for this. I think in assets that tend to trend a lot, which gold at the moment, at least, actually for the past year, is one of these assets, you probably are better off with a trading strategy that follows the trend. So what I did is I used my contrarian strategy more as a means of position exiting, and I'm focusing more on momentum breakouts. You might have seen this chart from me already. So momentum breakouts are something like this, for example, here, where the market shows a good momentum, hopefully also combined with price action breaking out. And then I like to go with the trend on the pullbacks or to these moving averages, which is the 21 EMA, that's the yellow line, and the 50 EMA, which is the red line, in combination with this 200 EMA, where usually underneath this one is my stop loss. And what I do here is, this is something I cannot show you sadly, is that I combine this with price action. And something I like to call momentum analysis is a combination of price action and the angle of the slope of a breakout. So is this a rather quiet breakout, like the one we saw, for example, in the early morning session here? Or is that one with a lot of momentum, like the one we saw here on Friday in the afternoon session, where gold really chopped down? So this is what I call momentum. And there's an optimal window for this momentum. You don't want the breakout to be too steep. You don't want the breakout to be too shallow. There's an optimal window for this in combination with price action. I cannot give you the details on what that is, because then I would be giving away my proprietary signals. And yeah, Paul is asking what is the currency of the strategy, so I can compare it with me. Yeah, I can give you some details there, actually, if you're interested. Let me just switch back to the other screen, because I did some testing there actually yesterday. And where is it now again? This one here. I did some testing there yesterday. And now that looks like a presentation. Don't be afraid of it. It's not that I want to sell you something here. There is nothing to sell or nothing I want to sell. But what I did basically is I'm using AI. I'm using Claude to help me to analyze my strategies and find an edge. How can you do that? You basically, download your chart. Tell them, okay, if this and this and this happens, this is a long signal, this and this and this happens, this is a short signal. Please find out for me if this strategy has an edge. And the first step is always to see like what is like the optimal profit target. And for this strategy, for example, with the help of Claude, I found out my optimal profit target per signal from the strategy is at 0.3%, which would translate currently to gold at a profit target of around $10. Risk reward ratio is 1-to-1. So you would have a profit target, $10 above your entry, a stop loss, $10 below your entry. And this is something you normally would painstakingly go through to find out where is the optimal exit for my strategy. Is it at 1%? Is then maybe no optimal exit because it doesn't work very well? So here, with the help of Claude, it found out that the optimal profit target is 0.3%, which makes sense because we have quite a lot of signals throughout the day. And this is interesting. The success rate of these signals for the bull market signals, so for long entries and bear entries, is roughly the same at almost 76%. And 76% is very, very high, in my opinion. This is something you do not see very much. Now, if I go back here, you can see, for example, that in here I analyzed 20,000 data points. So the data for this goes all the way back to September of last year. And you can expect in 2.63% of all these data points to actually have signals. So in total, with the help of AI, and this was a process that only took like 30 minutes, which normally would have taken me a couple of days to do this manually or code it manually. And in that case, we had 526 signals, 75.6% success rate, and a time-based edge of 25.7%. Now, if we just would have traded always 1 ounce, that would have led us to what did I say earlier? 15.4%. So this doesn't like include any leverage, nothing. This would be like every time there's a signal, you buy 1 ounce of gold, so you invest $3,350 or you take a short position. If you trade with leverage, you could of course amplify that. And the next thing I do with all of my strategies, this is a very important part because in my opinion, this is where you find the true edge of your strategy, is that you do optimal trading hours analysis. And you can do that also very easy, for example, with ChatGPT, with Claude, or with any AI language model out there, is that you ask it, please analyze for me if there are certain times of the day where the success rate or the edge is higher than at other trading hours. And this is exactly what I did. And it found out, yeah, there are statistical significant edges at certain hours. For example, at 20, so at 8 p.m., that is Central European time, the success rate of the signals is 100%. Now, bear in mind, these were only 11 signals over the time. But nonetheless, that is quite significant. Even at 9 a.m. CET, at 12 p.m. CET, also 68 to 85% of success rate. Interesting enough, if you trade at midnight, you have below 50%. So this you can then translate into optimal trading sessions. Like, for example, that you want to trade the strategy from 9 to 12, 9 a.m. to 12 p.m., Mondays to Fridays. So that's the European focus. If you are up that early already, or if you're living somewhere in the Asian region or Australia, maybe, for example, the strategy is optimal to also trade between 2 a.m. CET and 4 a.m. CET. I'm usually sleeping at that time. And then again in the afternoon session of the USA, which is for us Europeans at 8 p.m. And you can see here also the edge that gives you, like the success rate here, as I said, 8 p.m. afternoon session. 8 p.m. evening session, afternoon session, that is, of course, in the USA, is 100%. And between the time windows here in Europe and Asia, we are between 85.7 and 86% of success rate. So that is really, really, really interesting findings. Yes, if you are completely new to doing something like this, you will need to do that, or you should do that yourself. I can do that myself, but as I said earlier, it probably would take me 1 day to 1.5 days to put this all into code. And why should I do that if I, with the help of AI, can analyze the same? The thing you need to know is you need to be able to identify when the AI messes up, which can be the case sometimes. So you need to have a critical view and see, like, hey, is that really the case? Is that true? I need to fact check you there, dear language model, if that is really correct. So it's a tool like any other tool, and if you just use it and you don't know anything about coding, you don't know anything about analyzing strategies, that would be kind of like saying, why do I need to read myself if I have somebody who can read to me? So definitely a point you are having there, Jalapeno. And yes, I actually tested this on Renko charts. Well, you can just, if you go to, I'll show you that in a minute, actually. You can download that directly from TradingView if that is you are using. How does the schedule affect crypto, which trades during the weekend? Now, this analysis I did here is for my strategy that I trade on gold. If you trade on crypto, or for my, as a matter of fact, crypto trading strategy, well, of course, it's trading 24/7 then. Yeah, exactly. This is why you need critical thinking. You need to be able to spot test, like, is what the AI is doing there correct, or is it hallucinating something? Absolutely. This is why I said you cannot just turn off your brain and believe everything you read. You need to make sure everything the AI does is correct. But if done so, it's really a valid tool. And why shouldn't you use that tool if it saves you like 1.5 days of work, or even more? Or maybe if you don't need to code, you backtest everything manually. You go crazy and you cannot really answer questions like, what is the optimal profit target? Are more certain times of a day more profitable than other days? You cannot answer that when you backtest manually. Well, you can, but it will take a lot more time. And I'm even going as far that the likelihood that with manual backtesting you make a mistake is higher than the AI doing hallucinating, especially if you are able to analyze for yourself, is that realistic what we are seeing here from the AI? Now, remember, I didn't let the AI optimize my trading strategies, so the signal logic is always the same. The only optimization I told it was the time optimization and profit target optimization. Otherwise, we would be in the realm of curve fitting already, which does not give you an edge. So yeah, this is why I show you this. I think like this, you can put another dimension into your trading strategies to analyze when are the optimal times during a day for me to actually trade my strategy. Does it work throughout the whole day, throughout 24 hours per day the same, or are there certain times of the day where the signal quality is better than on other days? So yeah, this is the trading strategy I'm going to implement now for the high stakes account I'm using, and then throughout the next months I'll let you know how it works. Let me switch back to my charts now. What do you mean setup? You expect me now to share everything that goes into the strategy with you just like this? I think you will understand that this is not happening. We do a lot of live trading here, by the way. I didn't do anything today yet because simply the fact that I haven't gotten any signals that I deem trade-worthy yet. But if we get some signals within the next, 1 hour, 50 minutes that I'm still with you guys, I will trade them, of course. That being said, please remember also, this is not the type of live stream where we trade something, we copy that. What we share with you are actually strategies or how we approach the markets, what we look for, and in the hopes that you are able to take these tools and then formulate your own strategy. Because if I simply am offering something like copy trading, what are you going to do if I'm not there anymore? If I just say, oh, I don't want to do this live streaming stuff anymore, I don't want to share my strategies anymore, then you're back to square one. So take all the information, not only from what I'm saying here, of course, that goes as well for all the other live streamers, all the other people that are going to join this live stream later on today. Please take what they do, and the approaches of how they approach the markets are very, very different. You might know that I'm more actually a fundamental. I'm a statistic driven trader, whereas you have like price action driven traders like Victor or Jonatan, who trade is totally different setups. Take what is worth for you, try to implement it for you. This is you know what? I'm going to do that maybe on ABL Labs. Maybe I should do a course like how to use AI to analyze trading strategies, what are the prompts I'm using, and so on and so forth. I think it goes a little bit too far to do that like in this session, but I mean, possibly I have to talk with Jonatan about this obviously first, because he's the one finally deciding like what to talk about on these streams. We could do like a special stream on using AI to create a trading strategy or how to optimize an existing trading strategy. Let me put it like this. Yeah, gold. So for gold, what I'm waiting for, I was long earlier. I exited these trades because my profit targets were hit. I didn't re-enter these trades. So on these three long trades, I didn't re-enter because I think the market has been too much to the upside already, too much momentum to the upside. Yeah, correctly, I wanted to show you this. So if you have a Renko chart here, like the top left one for gold, for example, you can go to this here, and then you click on, so next to however you named your layout here, and you go to export chart data. First, you want to scroll out here as much as possible, so you get all the data that is available for you there, and then you can export it either with a Unix timestamp. I always prefer the ISO timestamp because it's UTC-based data. Then you click on export, and then it's going to download a CSV file for you, which you can just import then to any language model and start, for example, by saying, hey, ChatGPT, please analyze what do you see in this file, to make sure the AI sees all the necessary data that you later on want to analyze. Yeah, back to gold. So there were 4 more long entries according to my system. I did not trade them because we have been pushing up by quite a while. My favorite scenario now, where I would really reconsider going long again, is if we see price going back to the 200 EMA, which is the blue line here. This can happen in 2 ways. This can happen either that we slump down. I think that's the most unlikely scenario, given the momentum we are seeing here right now, or that we see kind of a prolonged sideways move, at least until the USA later enters, so maybe until like 2 or 230 CET. And during this time, this 200 EMA is going to catch up. So basically, that would be a reset of the whole system. Could also be possible, and we might see the beginnings of that we get a bounce back now over the moving averages. I want to have the 21 EMA, by the way, to stay above the 50 EMA, preferably. And that we then see something like this, and then a retest. So you could also trade the retest of the EMAs, in my opinion. But the question here is are you able to then get a favorable risk-reward ratio? Because bear in mind for that, if we translate this into a position, where is my... here long position. So let's say, for example, bounce back and you go long here. You probably would have your why can't I enter my stop loss here now? What is that? Okay, let's do it manually. That would be stop loss, stop loss, stop loss, stop loss. Stop level at 3335. So you would have, if you target just a short move, well, it's still a risk reward ratio of 1.57, which still is okay, but it's not correct. I'm seeing here right now because we would enter, of course, up here. So it would be in 0.51 risk reward ratio, which I do not think is that attractive. So I would prefer to really see the market doing this. This is why I like to trade so much with first momentum breakout, like the one we saw here with a pullback. We had everything. We had nicely the moving averages already over the 200 EMA, because then you can have a very narrow stop loss underneath the last low, and you still are left with a lot of upside potential. This is how you can catch those 2.5, 3 or 4 hour trades. I'm not saying that I'm very good in catching those, but because that I'm not very patient when it comes to my trading positions, but certainly that would be a strategy to do that. So at the moment, I think not necessarily something that jumps to my eye where I say, oh, this is really, I need to trade this pattern for sure in gold at the moment. Let me know what are you currently, guys, in a position? I saw Adam requested gold. Adam, are you currently in a gold position? Well, in general, here Spot Clip asking, do you think you will also be looking for other confluences that will put you on off certain trades if you analyze it like this rather than backtest? Yeah, in general, of course, the more confluence factors you find, the better. So confluence factors, for example, if you want to do it from a pure technical point of view, could be something like that you have moving averages aligning up. Maybe you want to add momentum-based indicators like a slow stochastic, like for what it's worth, the RSI, if you want to do something like this. And maybe you have like 5, 6, 8 different indicators plus price action you're looking at. And if you say something like, okay, I want 7 or 8 out of those 10 potential confluence signals pointing in the same direction, then I'm willing to take a trade. I think that's fair, you know. But this is exactly like what you could then backtest with AI. This is very hard, in my opinion, to manually backtest. This is also hard to code it by yourself. I mean, once you have kind of the code foundation laid out, it's pretty much always the same. But handling data that you export is also not so easy, because you need to make sure the data is clean, and all of this can be much faster done with the help of AI. Now, again, that doesn't mean you can turn off your brain and solely rely on AI. It's not like this. That would be the same discussion you for sure had back then. At least I had it. You know, and when going to school, and it was the first time you were able to use a calculator, of course, students would always ask, why do I need to know how to calculate it myself if I can do a calculator? Well, because then you are better in bug fixing, then you are better in critical thinking, and you are better in finding the errors that even a calculator might make. Okay, let's look here. Your ordinary trader is long since 3,320. Very nice entry. Really good. What made you enter that trade? And are you still in it? Because 50 at the moment seems to be 50 to 60, a little bit of a blockage in the road. Yeah, dollar rand. That's quite a trade. Are you doing this because of the carry, that you want to get the higher interest from the South African rand than the interest you pay for the US dollar swap currently, probably? But hard trade, but yeah, of course, could be affected also by what we heard from Morgan Stanley this morning. Then we have Nelson, currently long US dollar and long euro dollar, sorry, and short dollar yen. Picked exactly the correct trades. Nelson closed gold at 3317. Okay, you still should have gotten a good entry there. And Adam, can you please suggest a solid strategy for consistent results? I'm in a funded challenge. Adam, this is exactly what you need to come up with you yourself. Me and my colleagues here are sharing what we are doing. Of course, we are not sharing the full picture, because you need to understand that all these strategies took a long time to develop, or are still in ongoing development. That is at least true for me for gold dollar. Like, I started trading gold dollar, what was it, like, I think 2 or 2.5 months ago on the short time frame. That is, I didn't touch gold before that, because I simply didn't like it as a macro long-term asset. And so for me, it is a learning curve, again, despite me being in trading and investing for 26 years already. So I went through the same process that you should do. You come up with a strategy, which can be, of course, inspired by everything we are showing you here. And then the next step is that you formulate the strategy and, for example, use then AI to backtest it and to start tweaking it. And by tweaking, I do not mean something like find the optimal inputs for an RSI so I can trade with this. Have your strategy nailed down, analyze it itself without any leverage, and then start tweaking it, for example, by optimizing profit targets, by optimizing times of a day where you want to trade the strategy. Have a look at something. How does the strategy behave when news are coming out? The problem is any strategy that is like totally transparent and available for everybody is not going to work anymore. Because strategies always rely on this little edge that you discovered something that no one else yet has discovered. And so be inspired, go for it, take the time to develop this. Don't just copy anybody else. Please don't do that, because always remember, when that person is not offering his or her services anymore, you know, you are going to be in problem, because you're basically starting at 0 again. Most basically based on price action trend line breaks on daily time frame on 30 minutes and previous day high breaks. Yeah, this is actually also something that I advise you guys doing. So there is an indicator which I sometimes like to use also, which is called, how is it again? Yeah, key levels Baseman BTC IDWM. And what this indicator does is, and it's publicly available on TradingView, it paints for you specific levels on your chart. For example, where was the daily open? Where was, if you want, the previous high and low? Where was the weekly open, the weekly high, the weekly mid, the monthly, the quarterly, the yearly, and so on? Because very often you will see around those how to call them, those price levels that the market likes to reverse or go to this price level. If you see, for example, something like this is something I would look at. I don't have it on these charts, but rest assured, I'm also looking at these levels. Of course, if you have, for example, that would be probably daily opening here, I assume. Let's have a look. Of the Monday range mid, probably. If that aligns, for example, with a 200 EMA, that would be for me a zone of confluence. So this is something where I would look for price action. For example, if you want to trade hammers or dojis or you name it all. I'm not a big follower of candlestick price action, but I know people who are doing it successfully. Or these typically would be probably zones also where somebody like Victor, who's going to come on later, would be looking for price action or for so-called Quasimodo patterns, for order blocks and so on. So these are levels you might want to focus on. That is always a good idea. Again, let me show that to you again. Spaceman. So if you type in here just space, you should, but I have it as my favorite. So Spaceman, if you type in it, yeah, then it's here, the key levels, Spaceman BTC. Really good indicator. It's available for free. It shows you those levels that are always becoming more and more important also going through the week. So you can be sure, like on a Tuesday or Wednesday, that the market will look at those Monday levels, like what was the range of Monday is going to become important tomorrow. And if you see at these points when the price approaches this price action, or I would typically look for those momentum moves where I have a certain angles when I look at how the price moves in comparison to how the moving average are moving. This is the edge probably you're looking for. This would also be something interesting to analyze, like with AI, for example, because that would be a hideous task to analyze by yourself. What else do we have here? No spot slip. I do not have them saved, but as I said, I'm either going to do maybe a live stream special in the near future about how to optimize trading strategies with the help of AI, or maybe I'll record a whole course on this, which would then be published with also with the 5ers, but AlphaBeta Labs, which is an education platform of the 5ers, and somewhere there. I don't think it's wise to do it here on the fly, because this is really something we should dedicate probably not half an hour, but more of an hour for, because there are many traps, in my opinion, also you can step in for. Yeah, always trying to be transparent, trying to be realistic, on what you can expect and which is the way you want to go. Mohammed is shorting Bitcoin, or has been shorting Bitcoin. And man, you got the top there almost. 105,881. That was almost the top. Congratulations. Great trade, man. When are you going to close that? Have you closed it already? Yeah, it's not only depending on the PMI. So the picture is more complex than that. When it comes to interest rates, I would look at the moment at the combination of inflation rate, which of course is approaching 2%, plus what the job market is doing. Because ideally, the Fed wants to do wants to see the combination of lower inflation and also a lower job market, which sounds bad, of course, but of course, if you have a good job market, you have a lot of people employed, that drives inflation because people can spend more. Then we have James, who bought gold nice at 3310. That was a beautiful entry. Please make sure that you do not give away, that you do not end up with a loss in this position. So at one point, move your stop loss to break even. Nothing worse than looking at then seeing a trade that was already very nice in profit to do to end up in a loss. Yeah, I've been seeing you guys talking a lot about ICT concepts. I haven't looked into that yet. Seems to be very popular at the moment. Do you have any resources where you can learn about this? Not that I necessarily want to have another toolbox that I want to incorporate into my trading strategy, but I always like to look at what is out there. So talking about likes, guys, we had 84 likes. Come on, press that like button out there so we get those likes in. And we have more people joining, the more the merrier. And we can have a good discussion about trading. Yeah, you can see here, this is after a big move. It's very typical that you see a contraction. So the level of 50, 60 was actually, but let's pretend it's 50 right now. Prices like the round numbers was not conquered, so to say. So price moves down. Wouldn't be surprised later. Actually, two things can happen, in my opinion. We can have later on Donald Trump issuing some statement about how he will protect, he's the US dollar president and he will protect US dollar strength. I think that's quite realistic that something like this happens, or maybe not a press conference, but a tweet, which is his preferred medium to share his thoughts, of course. would be that would be something. If that happens, I would expect, well, first of all, you can throw all technical analysis at that moment out of the window. It's not going to help you, obviously. Technical analysis when markets are moving because of news. But then I wouldn't be surprised to see, for example, gold very quickly to go to this 30 level, potentially even lower there. This is then the level where we can see if we want to look for longs, for example. Again, same with the US dollar, which would go stronger than, of course. But let's see how that is. I'm also interested later on in what Jerome Powell is going to say. I think we have some economic news later on. Yeah, we have the ISM PMI, which who was it? Mohammed was talking about earlier, also coming out. If that one, that could be because it's a impactful news. If this one comes in lower actually than the expectation forecast is 49.5, that could very well also put a bit of more pressure onto the US dollar again. So could be a explosive combination we are seeing there. We have also talking about news here. Let's quickly have a look at those. Tomorrow, of course, super important. We have the Bank of Australia sharing the meeting minutes. We have, if you are in the Chinese markets, the manufacturing PMI from China coming in. We have, this is for me the most important, even more important than the EU inflation rate, the JOLTS job opening, because this is going to give us an indication what to expect from the non-farm payrolls also, which are going to be released this Friday. Again, 130,000 forecast, because often you see when the JOLTS job opening come in lower than expected, that the non-farm payrolls here, they are also a bit lower than expected, which then again, could put pressure on the dollar. It's going to be an interesting week. One word of advice, never go all in anyway. I think I should have to mention that, but be aware that at any time, especially in the combination with Trump, there can be extreme volatility suddenly. This is something that personally gives me very often a headache when trading cryptocurrencies. You have great setups. Everything is pointing with a high level of security into one direction. This setup normally is like successful 68 to 75% of the time. And then you have Donald Trump tweeting something which totally makes your whole analysis obsolete. So don't, get married to your trade when you see that the news landscape out there is changing. This is also why I do not think that it's wise to trade, for example, during news events. Yeah, Raphael, I will have a look at ICT. I won't mention it if I don't like what I see. But I heard this a lot, actually, also on our live streams here, that people are talking about ICT. And my God, I'm the last one to not look into it, because I remember, when was it, like 15, 20 years ago, when price action came up and people were suddenly looking at candlestick patterns more, especially at hammers and dojis, shooting stars and so on, in combination with support and resistance. That this was quite interesting as well and gave an edge. Do I think the Swiss francs could replace the Japanese yen? Well, it has. If we look at Europe, I think the Swiss franc is the safe haven currency in Europe already, that for sure. I do not think it's going to replace the yen, because for somebody, for example, living in Asia, the franc is not really an alternative to the US dollar. In my opinion, Switzerland is simply too small for that. So it's kind of, if you live in the Asian region and you're not so fond of the US dollar, you're probably still going to flock to the yen. Whereas in the Western world, well, we could see a shift of paradigm between dollar. We can have a look actually where dollar Swissy is trading at the moment. Do I have it on here? I do not have it on here for whatever reason, but let's have a look. Yeah, I mean, that's the pattern we've been seeing for a while now as well, no? If we look at dollar Swiss, has come all the way down from parity to 82. That's quite a move, guys. So if the dollar continues to weaken, you can expect this pattern also. It looks almost like a bit like the DXY pattern we talked about this morning first, but a little bit in overdrive. But as a replacement for the yen, I don't see that, honestly speaking, that much. Good. What do we have? Adam is looking for a gold buy limit. Yeah, 30 is the sweet spot there. I agree with you at the moment. This is kind of also what I'm waiting for. That's coming down. But we could, of course, also see rebound momentum to the upside. You gotta be patient and, and trade what we see and not trade what we want. And Nelson, gold trade. Well, 3317 to 3344, man, that's still an awesome trade. Nothing wrong with that. For Monday morning, especially, you don't see that much volatility very often on Monday mornings. Tend to be a bit more boring. Raj, currently no trade in gold. We are waiting there, or at least I am waiting, I should say, for a pullback to that blue moving average, the 200 EMA, which is currently trading at 36. So somewhere between 30 and 36, that would be my sweet spot for more long positions. That does not mean that I'm not willing to enter another long position, because we are approaching it at the moment. So the risk-reward picture is a little bit better already now than it was a while ago. So right now we're talking about $9 to $10. Upside, usually my system is also $10, so we would be at 1-to-1. But yeah, let's see. Let's see, how is the general trend? Yeah, but the general trend for gold, short term, on the 2-minute chart, that is, has also switched to bearish again. So I don't want the long trades at the moment in gold. Let's see. Needs to go through this compression period again. Would be interesting to hear later on what Victor has to say about this. All right. Good. Yeah, I'm looking through my charts here right now. If I can spot anything interesting. Anybody trading oil? I always wonder, like WTI has come down all the way here from 120, almost halved. Why didn't the price of gasoline halve? It's so expensive here in Germany. If you run a lot of people still use diesel cars, but if you run a normal car like E5 or E10 fuel, I think it's like 160 to 170 the price, which is the same price we had when we were trading at $90. Crazy. Lucky I rarely use a car. I'm more a user of my bicycle. Anybody been looking for NVIDIA, by the way? Did you see the numbers coming out that were quite strong? Better than expected first quarter. They reported $81 in earnings per share, so 7 cents more. That's an outperformance of almost 10% than what was expected. I'm wondering really why pre-market they are lower at the moment. That doesn't make any sense, but must be because of a whole sentiment. Ethereum, Bitcoin, same story. I mean, just like looking at this chart, for example, Ethereum versus Bitcoin, I don't see any reason why I ever should buy Ethereum. like, why should I buy Ethereum? Why should I bet on an outperformance of Ethereum? Well, yeah, Dirk, sooner or later it's going to bounce back. Yeah, might be the case for sure. But this is the argument I already heard when we were up here, when we were up here, when we were up here. Now Ethereum is going to outperform, and it never did. I don't think Ethereum is a good trade. I rather would stick to something like Solana. Yeah, Bitcoin, we can quickly jump into this because this is from a technical perspective also quite an interesting pattern at the moment. It's really in nowhere's land right now. We, in my opinion at least, and I don't like to say something like this lighthearted because it always sounds like I don't know what to say about this at the moment. I don't think it was very good that we fell underneath the last previous all-time high at 107,000 US dollars again. So ideally, we should see a breakout again. If that doesn't happen, then the longer it takes, the longer we stay at these price levels, the more it would look like something we saw in 2021 with this double top. I mean, by the looks of it at the moment, this structure here, the double top, you remember, if you were in crypto already back then, looks a bit like the structure we are seeing right now, right? So that's a possibility. The only thing that keeps me from saying this is actually two things. First of all, this chart. Come on, trading competition on TradingView. I don't want to participate. My go-to chart when it comes to long-term Bitcoin analysis. The Bitcoin. That's actually very interesting, Sir Lancelot. I was looking at Palladium the other day as well. I agree that it might be a nice trade, especially for this economic combination of a stagflation we are seeing in the States at the moment. Commodities should greatly actually benefit from that. Yeah, back to Bitcoin. So if you've been watching my live streams here with the 5ers, you've heard me talking about this chart every now and then. When Bitcoin does things, it's a basic logarithmic regression. This indicator also was coded by me, and you can find it for free on TradingView as well. If you Google for Bitcoin logarithmic regression, it should be somewhere here to find. It's under here, so it's by the good, the bad, and the Bitcoin, which is me on TradingView. And then you need to do two things. You need to put the so first of all, it works on a daily long-term chart for Bitcoin. I'm using the Bitcoin all-time index, which is this one from TradingView directly. And then you need to put it here to logarithm, because if you have it on regular, it's going to look like this. But it's called not a regular regression. It's called a logarithmic regression. And this is an indicator or a mathematical model that I've been using for Bitcoin already for, well, I think I started in 2021 when we were somewhere here, I think, using exactly this model. Nothing has changed. So it's not adapted to the price or anything. It simply forecasts according to a logarithmic regression within what channels can we see fair prices for Bitcoin and within what regions are prices heated up too much for Bitcoin. And the interesting thing, and the reason why I think we might not be at the end of a bull market yet, is that every 4 years after the halvings, we are seeing a breakout out of this green channel until we reach the red channel on the top. So this happened, we can zoom all the way back here. This happened in 2012. This happened in 2016 or 2017. This happened in 2021. And why not should it happen again right now? And a breakout out of this green channel with a target in this box would potentially mean a price target for Bitcoin by end of October, by mid-January, if you want to believe another model, which I can talk about in a second as well. A price target somewhere between 200 and 300,000 US dollars for Bitcoin. Now, just because that happened the last 4 times, of course, doesn't necessarily mean it's going to happen again. We could as well see like a double top. In this case, the so-called alpha decay would be better, One thing, however, my opinion, even if you don't believe like that we are going to see those crazy returns still in Bitcoin this year, is that that 2026 in large parts probably is going to be a bear market, because we had 3 positive years. If we would close at that price now, 31st of December, we would have had a positive year in Bitcoin again. And since 2011, we always had the cycle of 3 positive years, 1 bear market year for Bitcoin. So the expectation for 2026 is not necessarily a good one. And funny enough, with my own model points into the same direction as a different model, which is called the Bitcoin Power Law. That's not the correct chart. It's another one. So this chart here, this is by an Italian physicist called, his first name is Giovanni. I don't know what his last name is actually. And he models Bitcoin like a power law. A power law is something you see very often in nature, and it's something that can explain exponential growth, for example. And according to his power law, the top of this cycle of Bitcoin is somewhere in January and should be somewhere around 200,000 US dollars. And this worked very well. I have to give him that really in the past. Right now, interestingly enough, the current price according to the power law, the fair price is at 97,000 US dollars for Bitcoin. So we're a little bit according to this module, to this model of analyzing the price of Bitcoin, whether it's fair or not, we're a little bit overvalued, but this is also to be expected in this phase of a bull market. So let's see. I mean, the 200,000 he says are very much inclined with what my logarithmic regression is telling me. This is really going to put those models to the test. But if true, there's a lot of upside still to be had. And interestingly enough, if you look, for example, for Google searches for Bitcoin, they are not very high. So nobody in the public currently is very much interested in Bitcoin. Back to gold. Like I said, guys, what we see very often after an early morning trending phase of gold, we see it going more into a sideways phase. For me, really nothing that jumps here into my mind where I say, oh, I necessarily need to trade gold right now. We're approaching 12 p.m. also here in Europe, which means we're leaving this optimized window for trading that I was talking earlier about when I showed you the results of my analysis. You're living in Germany. DB stands for Deutsche Bahn. No? Always reach an hour. Yeah, it's exactly what I do. When I need to travel somewhere, I'm always 1 hour earlier at the train station, because the German train called Deutsche Bahn, they are notoriously late. I think like 70% or something I read the other day of the trains are delayed, which is of course horrible. I mean, imagine if you have to catch a flight or something, and then you're standing there and cannot catch your flight because the train is always late. I had like experiences. I was standing at 4 a.m. waiting for the train to take me to the airport. And then 5 minutes before the train is supposed to arrive, they make an announcement. Oh, train is not coming because for whatever reason, somebody didn't show up for work, or I don't know, still too drunk, or whatever the reason was. And please look for alternatives. And then you think like, man, I'm standing here somewhere in the middle of nowhere. What is my alternative? My alternative is walking right now. So regular people would miss trains. And it's suitable. The Dutch train system, that's kind of confident, is the same. It's such a hassle. And then the German government, of course, wants everybody who commutes, for example, into the metropole. So if you're living outside of Berlin, for example, and you commute for work to Berlin, to preferably take public transport, like the German railway services. But how can you do that? If you are notoriously late or not showing up, it ends up with everybody taking their own car. That is really the craziness of German bureaucracy. So the myth of Germans being super efficient still made in Germany, I think that is long over, that myth. Is anybody of you going to trade the indices today? NASDAQ or S&P 500? Because I think we're going to see some probably nice moves as well there as well. Yeah, good bearish price action here. NASDAQ catching up. It's also why we see, of course, short on DAX. It's like so weird now. As a German, I do not trade the DAX. Not because I don't like it, but when I was within my first position as a stockbroker back then, I like one of the things my boss back then told me, like kind of stuck with me. He said, like, Dirk, if you want to trade the DAX, you can do that, but only trade it until like 12 p.m. Central European time. Why? Because then the US dollar futures are getting more liquidity, and the DAX will simply start to copy what the S&P 500 has been doing. Now, this is, in my opinion, still very much true. At the moment, we are a little bit in a period of exception because of all the money that has flown into military stocks. Is Rheinmetall part of the DAX? I think they are, no? To see, this is how not often I look at German stocks. But I mean, I get that a lot of people like to trade the DAX because it's nice and offers good volatility. So Lancelot says here, since Trump, indices trading is not the same anymore. That's true for everything. It's true for trading the US dollar. It's true for indices. It's true for cryptocurrencies. And so it's very difficult. So yeah, Rheinmetall, of course, which is a German military manufacturer, they have had a phenomenal rise, of course, in price because they are profiting a lot from Germany heightening its military budget by what is it like? They're investing additional 100 billion euros because they're afraid of everything that's coming from Russia naturally at the moment. So all those stocks, especially Rheinmetall, are profiting from it very, very much. And this is also partly why we've seen the DAX trading close or above its all-time highs. I don't even know if it's all above the all-time high at the moment. Yeah, but maybe I should give it a chance again. But I'm so focused on Forex and crypto and the indices later. Henry sees a quasi on the 4-hour cut yen chart. Let's have a look, Henry. But of course, that would be more something to ask Victor, our quasi expert, or I think the inventor of the quasi, we could also say. But I just want to clean up my Bitcoin chart here a little bit, and then we have a look at CAD yen. And you said 4 hours, right? So what are you now? I'm not the best in this quasi trading. So I only know about this concept also since I know Victor, but I assume you're probably talking about this structure here, no? Shoulder, head, shoulder. So you would expect like prices underneath this probably, right? Correct me if I'm wrong, Henry. I'm not trading quasis myself. But is this something you would be expecting now? Price to fall below 103.25 or whatever? And while we give Harry some time to answer, I saw a question earlier that I still wanted to answer. Where is it? I should have marked it so I don't lose it. Somebody was asking if I'm trading euro dollar. I do, but most of my Forex positions, I do not trade through spot. Spot meaning like, for example, you do in the MT5. I'm an options trader when it comes to Forex options. So I sell Forex options. For that, I get a premium. And then over the time until the option expires, I need to defend that premium. But it's an instrument that's not available on the The5ers or actually on most trading platforms. It's very, very specialized. This is what I was doing for years when I was working for a family office. And so it's nothing I cover here because it's very, very technical. It's very mathematical, and I probably would, bore you to death. So that one and the smaller, so a quasi that would make. Are you referring to this one here, where the second shoulder is a bit higher? Probably, yeah. So we need to later, when Victor probably is going to join us in like in half an hour latest, we should ask him about whether that is a quasi structure. So a quasi means, if I'm not mistaken, a shoulder head shoulder formation, which is like not textbook technical, but where it's like a bit skewed up, like one shoulder higher than the other one, right? Mohammadali is asking about dollar yen. Yeah, probably you were not there earlier. One of my favorite trades. Still, you see, I drew here already earlier. It's a short trade for me. According to my yield, fair value yield analysis model on dollar yen, so which analyzes does the spread or the difference of yield between Japanese 10-year bonds and US 10-year treasuries say about the fair valuation of dollar yen. Dollar yen should be trading somewhere between 125 and 130, or let's say 135, which does not mean it's going to immediately down, but over the course of the next 4 to 6 months, I still am preferring short trades. So selling the dollar, buying the yen. Stronger yen, weaker dollar, that is, of course. And we were talking about this. Interesting. We can have, what is euro dollar doing? Anything here on the $4 hour chart? Now, Henry, since you are the quasi expert, wouldn't that technically also have been a quasi, but which didn't materialize itself? Like a failed quasi? Or am I just seeing things now? Really asking, like, I'm curious. I still mean Quasimodo. So you have like a two-legged shoulder, okay? Interesting. I have to ask Victor about it as well, because Victor is trading these patterns in what I believe is price action, so a combination of both, very, very, very successfully. So yeah, it seems like I've learned a little bit already. A failed Quasimodo, because this structure, and this is a good example how news can make your technical analysis totally obsolete, in my opinion. Because according to this one, the more likely outcome probably would be like a new lower low below this, if I'm not mistaken. As I said, I'm not a trader of quasis or shoulder head shoulder or inverted shoulder head shoulder formation, stuff like this. But this seems to have failed because of the news we were talking this morning about Morgan Stanley expecting over the course of the next, or for 2026, a decline of the US dollar of 9%, which led to this candle here and more of a breakout to the north. Really interested to hear later on what Victor has to say about this, because as I said, he's the expert on that. Victor, if you are listening already, if you want to join us a little bit earlier, then you can highlight this more with more data also than I'm having here. And well, we made it over 100 likes. Thank you guys. 111 likes already. My mouth is actually getting dry a bit because I've been talking nonstop. So let me maybe hand it over a little bit to you guys. You know what I'm looking for at the moment. Compression zone still in gold. I don't see any trade that really jumps to the eye. Indices I'm still going to wait for later. I want to trade those more actively during the US session. Bitcoin I'm trading a different model. I'm not so much focusing also on sharing stuff about Bitcoin or short-term Bitcoin trading here because it's not very attractive to trade on the The5ers platform. Maybe we should convince them to do like a crypto trading evaluation account also. That would be something. And Paul highlighting something about Quasi. Hi, from Watcher Victor, I believe Quasi is just head and shoulders tech analysis with an imbalance between left and right shoulder height from a neckline. That is also what I was thinking as well. I think this is also what Henry indicated with his graphic, that like, you know, a bit skewed up shoulders, head, shoulders formation, which probably is why it's called Quasimodo, right? But yeah, I know like Victor is like very, very successful with formations like this. Anything else, guys, you would like me to analyze, to have a look at? I can close these here first. Again. What trades are you currently in? What time frame are you interested in? Maybe I can share some insights. Anybody from Indonesia, by the way, watching the stream? Because I'm always looking at the Indonesian rupiah because my wife is from Indonesia, so I have a bit of a steal, yeah. It's like for me a two-sided metal when it comes to commodities in general. Now outside of a sphere of gold, which counts as a forex pair, not necessarily a commodity, I see the attractiveness of doing it. I haven't done it because first of all, like when I look at oil, I'm a terrible oil trader. That's why I never touch oil. It used to be the same case with gold, by the way, and I just have not enough knowledge about what is going on with something like copper, with something like steel or orange juice, soybeans, and all those commodities behind underneath the hood. So I don't know anything about cycles of agricultural harvest. Is it a good harvest, a bad harvest? Like tariffs when it comes to steel, about steel production itself. And throughout the year, I kind of made it my go-to strategy to not trade things that I don't really fully understand. I mean, probably you can never fully understand an asset, but like for euro dollar, for example, or for most forex pairs, I can say, okay, the move we are seeing, like the one this morning, this was caused by this, but nonetheless, this should continue like this. For something like steel, I just couldn't do that. Mohammed Dali, a bit of contrarian trader here in dollar yen. Hello, somebody from Indonesia. Good to see you. Terima kasih for watching. What do you have like? Oh, it's like Selamat Salam. What was it again? Good afternoon. Sorry. And another one from Indonesia. Good to see you guys. Alberto asking about cut yen. Let's have a quick look at cut yen on the 4 hour. Oh man, that doesn't look good. Are you long or short? Selamat sore. Right. My Indonesian is gotten so bad because I haven't been in Indonesia for the past 2.5 years. Bet to cut yet? Are you long? Are you short? Who was that asking? Cut yen. Oh, I lost it again. Yeah, here, Alberto. Are you long? Are you short at the moment, or just a general overview? Because, I mean, it goes into the same direction, in my opinion, that all or almost all US dollar pairs go at the moment in the direction of a weaker US dollar. Like from chart, just plainly looking at the chart, and I'm just doing this. I don't have any view really when on dollar Canada at the moment because it's simply a pair I'm not trading currently. because it used to be a pair that didn't move really that much. Has changed, obviously, with all the talks about Canada becoming the 31st state, 52nd or 52nd state of the US, which is of course not going to happen. But yeah, for me, it's like if you would put the pistol onto my chest and say, like, Dirk, you have to choose now. Are you going long or short dollar CAD? I would go short, and I would probably place my stop loss for a swing trading position somewhere here, slightly above 137.50, because. And I might be wrong again, because maybe Trump is going to tweet something to support the US dollar later. But the general picture at the moment, from an economic point of view, is a weaker US dollar. And I do not want to trade against the macro momentum we are seeing at the moment. Maybe I can put it like this. Question from Hello Kitty here, which is a very typical question. A lot of, I now assume that maybe you are still rather newish to this whole trading adventure. What time frame should I trade gold and Forex on? My suggestion for you, if you are like completely new to this, or maybe you've tried a little bit, maybe you've failed, maybe you just don't know how to start, is start with a higher time frames. Look first at something like the daily time frame. Maybe paint a picture here where you see like where are zones of support and resistance. And you can easily do that. You just take these horizontal lines, you go through the charts, and you put a line where you clearly can see, wow, this seems to be an area of support and resistance, like the one here, yeah, where we had 1, 2, 3, 4, 5, 6 times it took until we broke over the zone. This is in dollar CAD right now, and it seems to be an important zone still to this day, because this is where we reversed exactly to the downside again. So this is how I would start. And once you gain a bit of an understanding, how does this pair move, you can go to the lower time frames. You can look what happens at the 4 hour, at the hour. Do yourself a favor. Do not start with something like 5-minute charts, with 1-minute charts. I know it's attractive because we all like to click and we like the adrenaline and action, but on those low time frames, you're really competing with the big guys out there, with those hedge funds, with those investment banks that have hundreds of millions of dollars of budget to basically come up with algorithms that exploit you as a new trader. So it's much, much harder to find your edge there. And so do yourself a favor, start with a daily. Remember, it's okay, you don't need to trade every day. If you find like 1, 2, 3 trades, even if it's just 1 trade per month in the beginning, but this is a trade where you feel comfortable trading it, where you feel secure trading this, because you know exactly why you took the trade. You didn't take the trade just because you made an educated guess. This will be far more beneficial for your development as a trader than trying to guess patterns on 1-minute charts. At least from my experience. It might be different for you, of course, but usually I don't think I can remember seeing a new trader being successful in lower time frames right from the beginning. Extremely difficult. Let's motorcar. You seem like somebody who likes motorsports. Did you see Formula One on the weekend? I'm a big Formula One fan, as you can tell. I know AJ is too. Yeah, Aussie dollar. That is really interesting, because this is also a trade that LJ, for example, was talking a lot about last week, about longing Aussie dollar around this area of 64.40 roundabout. So the area we are right now in again. And I mean, we can see also with this candle, this is the daily chart. We can, of course, go also to the 4-hour chart, but it's profiting from the same we are seeing. We have a very narrow range here. So what you could do, of course, as well, is you could like play this range at the moment. Same story like for all other US dollar pairs. I would prefer to trade to the upside. But if we see something like it going down here, maybe to 64.06, where the 200 EMA is trading at the moment, 63.80 latest, I think that's a good long trade there, honestly speaking, because you can have a narrow stop loss and you still have enough upside left that you can trade with. Abdullah, that's a good question, Abdullah. Is it possible that crypto is maybe more bullish next year because of rate cuts? Yes and no. I used to have a chart for this. I don't have it right now anymore, but let me quickly take a note. We can talk about this next time. It's better to visualize this. So I took a note. You can analyze, for example, what happens to the stock markets and the crypto markets when we are in a phase of rate cuts. And what you'll see usually is that the first initial reaction is actually of both crypto and stock markets negative. Why? Because there's obviously a reason why a central bank needs to lower interest rates. Usually either because inflation is like is very, very low, or it wants to stimulate the economy by making like mortgages, loans to companies, especially more attractive. And so the first initial move for the first couple of months usually is negative until you have this effect of assets, of liquidity flowing into risk-on assets. I used to have a chart for that. I need to look it up. I probably would spend the rest of my stream now looking for that chart in those hundreds of chart layouts that I have saved here on TradingView. I took a note. I'll share that chart with you guys next time. Yeah, euro dollar we talked about earlier. Fabian says, in my opinion, I think gold might be starting a bearish trend. Look at the daily charts. It's creating lower highs and lows. Let's have a look quickly. If Fabian is onto something there. I see what you mean on the 4-hour chart already here. Yeah, it's you could also say this is a flex structure actually, no? But you're probably talking about this here, like if you want to take this wick, high, low, lower high, lower low, and if this was a high again, then we should see something down here forming maybe again. That could be, but within the whole structure, this also could be a consolidation pattern still. So something, that's why I said it's a bit like a flag pattern, something we saw here in 2024. Where we also had this, and you'll see this very often to extent. You, for example, saw this here, this flag pattern. I don't know if it's called flag pattern or whatever it is, and then a breakout to the north again. In my opinion, it's good that gold is actually hopefully slowing down a bit because the angle here is too high. It's not sustainable over the long term. But yet again, who am I to say that? I said the same back in the beginning of 2024, and look where we are trading now, right? I wouldn't. So it's in my opinion, it's a short-term bearish structure within a long-term bullish structure. And if maybe some of you guys can correct me here. Is this pattern here, is it called a flag or whatever? As you can guess already, I'm like not so good. I'm not looking at patterns like this very much. Henry is saying here we have a quasi pattern. It's gonna be a failed quasi on the daily. Here we are again. Quasis everywhere today, as it seems. Is that a quasi? Really? It's like a double shoulder. Is that, so would this be the head and this the shoulder and this the next shoulder? Is that more of a double top here? If you want to count the wick of the candle, of a large red candle here from the 22nd of April, yeah, for sure. But I usually prefer to have the bodies. The left shoulder is too high. Yeah, I think so too. It's more of a double top structure, no? But again, our expert when it comes to quasi structures and other nice things. Not only that, I don't want to reduce him to just quasi structures. There's like more awesome insight, as he has proven over and over again, when it comes to price action as well on the lower time frames. But yeah, interesting times. I think the day is going to be interesting for me, really. It's really dependent on if we see a tweet later from Trump Not much moving here at the moment in gold. Risk on assets, Bitcoin, stock markets, still in a mini downtrend. We gotta be patient here. I have to be patient to see if there's a trade. Alberto writing here 3 to 20 good price to short in gold. So you are looking for like a trend confirming entry, like a breakout entry, maybe that would be. I think that's something Jonatan also likes to trade. I'm more like still more looking for the long positions in gold, honestly speaking. Did I just click my gold chart away? Oh, here it is. But yeah, as I said, for me, this is like I said, if you joined just now, when I was earlier talking about gold, like an hour ago, I said one of the things that can happen is that we see like the sideways range until maybe 2 or 3 p.m. Central European time. And I would really prefer a setback to the moving average, the blue moving average, the 200 EMA, and then either a nice momentum breakout to the downside, which then I agree with you, Alberto. I would prefer the short entry there as well. I don't know if 20 maybe is already a little bit too late to enter though, but we'll have to see what the charts tell us then. Or really a nice momentum breakout to the upside, but then we are a bit kept up here at 50 as well. Difficult today. Let's see. Right now, I'm not touching gold anymore. Next period of time where I would trade gold for today, the next time window would be tonight at around 8 p.m. Central European time. So when we are in the afternoon session for the USA. And I think very much agree with you. Macroeconomics are mega important when trading gold. So we are going up. Yeah, this is the reason why we have seen that performance in gold over the last years, really. And it has been speeding up since Donald Trump was elected in November of last year. Why? Because it's a safe haven asset. Now, when people flock into something like gold in times of uncertainty and with everything that's going on in the world, of course, we are in the times of uncertainty. This is why gold is bought as much. Gold is bought as much. Oh. Excuse me, guys. My voice is slowly starting to fade away. But that being said, macroeconomic is important for everything. Not maybe, if you're like scalping $10 here and $10 there of price range in gold or any other asset on like 1 or 5 minute charts or something like this, then it's of course not as important. It is important when we are around a news event, then obviously. But like if we look at swing trades, if we look at long-term investing, which is like my bread and butter by the end of the day, investing for the next 3 to 5 years, then of course it's all about macroeconomics. Yeah, you always want to have a picture about how could the economy be 6 months, 1 year down the road, because the markets are trading now what they are expecting 3 to 6 to 9 months down the road. Excuse me. So yeah, macroeconomics, definitely something you need to have on your radar. And macroeconomics does not equal news trading, by the way. That's a whole different story. Good. 129 likes. Thank you a lot, guys. Doing this for 2 hours solo, always a little bit of a different story, but it's more important, of course, that Jonatan really takes his time to recover. There's nothing worse than catching a cold, not taking your time to get healthy again. This is like the sure and secure way into getting a heart infection and stuff like this. Good. We still have 5 minutes. I'm until the next people are going to join us. I wonder who it is, actually. Let me have a quick look. I think it should be Mike and Victor, if I'm not mistaken. Is it? I think so. Well, let's see who is going to join. Arun is asking, what's your win rate of your strategy and the average risk to reward ratio? The strategy I was talking about earlier, so the gold strategy that I'm finalizing working on right now as a success rate or win rate of 75.6%. This is with a risk reward ratio of 1:1. Now, ideally, I want to tweak it to a more optimal risk reward ratio. So that would be, for example, earning $1.5 per dollar risk. Then you can expect that the win rate goes lower. But if you really have like 1.5, that means I could go all the way down to under 50% to something like 42% and still be profitable. You think Ukraine's latest drone attack on Russia last night has played a significant role in gold spiking up? Well, I think gold would have spiked up already on the release of the news. I think the spike really, it plays a role for sure, but I think the spike we are seeing in gold is more on the fact that investment banks and, let's say, companies out there that are worth listening to when it comes to an outlook on the US dollar, that they are turning bearish on the US dollar. I think if luckily I lost I lost my hair very early on already. But probably if I still would have hair, I would have lost it by now because of trading and all the stress it brings with us. No, just kidding, of course. Trading does not necessarily need to be stressful, guys. Of course, there's always a lot of adrenaline involved, but this is why it's so important to have your strategy in place, to have your strategy in place, to have especially your risk management in place, because I see so many beginner traders being very focused on the success rate. I'm happy, Arun, that you also asked about the risk reward ratio, because usually from the first question I always get is like, what is your success rate? And I answer, well, if I would tell you now 75% or 90% or 50%, what does that mean for you, this information for you? Well, if you have 90% or 75%, you must be very successful. And no, it doesn't mean I'm successful. It's the thing is, I can have a 75% success rate or even a 95% success rate, but if I only earn like 5 cents for every dollar I risk, then it's just a matter of time until I'm broke. If I always go all in, it's just a matter of I'm broke. So it all depends really on the risk management that is tied to the success rate. The risk management, in my opinion, being the even more important component than the trading system as well. What is that? Yeah, we're not talking about gambling here, we're talking about trading. I was just talking about risk management. And when you write something like that, you flip $20 to $40. Yeah, if you want to play casino, please do it somewhere else. We are actually talking about actual trading, about realistic expectations here, and not about flipping, $20 into $40 with the throw of a dice. And yeah, please don't do that, guys. You're going to fail in doing that. So gold now having a little bit more momentum again. It looks very flat now on this chart. So let's maybe switch here to the Renko chart better. Trying to gain the upper hand again here at 50. But still, I would be surprised. I mean, if we say breakout here over 50, over 60, which was the previous high here, that would be a good indication that the trend continues. And then I'm probably going to think, man, I should have entered those 4 longs here. But let's see. It kind of matches, of course, what we are seeing in the indices in Bitcoin at the moment. We are seeing bearish structures in the NASDAQ. We're seeing a bearish structure, especially also in the S&P 500 still. We're seeing a very bearish structure this morning in Bitcoin also. So, of course, you have gold rising when the indices are falling. That does make a lot of sense. Dirk, for how many years should I backtest my strategy to validate, and for how many years did you backtest your strategy to get confidence? That depends. Depends on on if you're talking about like a strategy that you trade on 1 minute or 5 minute charts, or if it's like something on a daily chart or 4-hour charts. The general rule, of course, is the more data you have, the better. On trading strategies that focus on very short time frames, there's an exception because the volatility, of course, changes very quickly. So your system might have performed in a different volatility setting that we, for example, had 4 years ago or 10 years ago, different than it does now. So there's a greater emphasis on more recent data, for example, the data of the last year, when you use a more short-term trading strategy. For something like 4 hours a daily charts, I would test on as much data as I can get. The problem is also for something like 2-minute data, 1-minute data, 5-minute data, it can get quite expensive and it can get quite resource hungry to backtest and optimize on those, because you have a lot of data points. And especially if you want to use, for example, machine learning algorithms, if you want to use something like a transformer architecture, in that it really gets, well, let's say you need a very strong GPU and a lot of memory in your PC. I can see Mike in the background. Back from the dead, Mike. He's nodding.
I wouldn't go that far, Dirk.
Mike,
I'm very much still on death's door. I think.
What is up with you guys, Jonatan? Like sick, you guys have been kissing too much, I think.
Yeah, this is it. He sent me some IKEA furniture from Sweden.
Okay. And he coughed onto it before that.
Yeah, it was covered in germs. It must have been just covered in germs. So yeah. No,
is somebody going to join you here still? Or?
Yeah. LJ is going to join me in a bit.
LJ is going to join. Okay, good.
But yeah, no, I don't know what it is. I've had to start taking antibiotics today.
Man, so it's bacterial then.
Well, the doctor on Friday reckons it was viral, but she said, look, if you're not better by Monday, you can't keep just taking steroids. So try the antibiotics. So I don't look as if I've had any steroids, but yeah, we'll see. So yeah. Just before I jumped in, I did jump into a quick sell on EU. I don't know how far it's going to go.
Oh, you're also the contrarian today, yeah.
Well, no, I do think we're going long on the dollar, but I just think we might have a bit of a pullback now before it opens. Just on the 5-minute. So just a nice little.
You want to share your screen and maybe.
Yeah, do you know what? I'm going to have to apologize to everybody in advance.
Yeah, listen to Henry here. If I'm not mistaken, Henry, you are a professional, no, a healthcare professional. So we're not only offering analysis services here, we are also offering healthcare services.
The only problem is that Henry suggested that I go to Australia and open up a coffee farm, and I've told him that I'm not doing that because I can't be going near their spiders. So
yeah, that's why Australia is a no-go for me as well. I'm terrified of large insects, especially spiders. So I expect the moment I would exit the plane that something would land on me and kill me.
Yeah, exactly. So no, thank you. Excuse me. So I saw this a little while ago. I was just kind of watching the structure as we pulled out, and we're on this higher time frame area. Now we haven't broken. I think it was this one that we made. Sorry, we have broken that one. We broke this high, which was this nice long wick, and then if you look on the 5-minute, we had this nice structure where we had wick come up, push back down, nice engulfing candle, and then we had a couple more. We had this one here, So I was looking for this reaction. I didn't actually see this one actually open up. So where I've gotten in is not ideal. It's just basically here, but my stop's just above there.
I think that was also like an inside bar, no? Like
yeah. So
kind of the wick is a little bit too high, maybe. For
I mean, it's been incredibly impulsive today. So I'm of the belief that yes, if we're going to see weakness in the dollar, then prior to New York, they'll want to get some better positions. So we'll see. It's a rough 1 hour, basically coming down to the wick of this, because we've got this 15-minute engulfing candle. So I'm expecting this to come back down, test this wick, and then shoot back up. So
we were talking earlier about I was monologuing about that actually, about like I'm a little bit afraid. Like, I mean, the move we are seeing in the US dollar weakness is, in my opinion, due to what Morgan Stanley was saying about expecting a 9% decline of the US dollar over the next, or in 2020, or going into 2026. And I'm a bit afraid that later on, when the orange gentleman wakes up, he's going to tweet about how strong the US dollar is going to be. So I'm a bit afraid of really being caught off guard, and suddenly we have like euro dollar slumping down again, which is the correct trade when we are seeing right now from you, of course. And but also like gold, for example, which spiked so much up, like suddenly trading then at 320, which one of our viewers has like as a target to enter a trend confirming short position, for example. So I'm happy that my time window, like between 10 and 12, is over now, where I engage in gold trades.
Yeah, quite. Well, I mean, I'm probably more looking for us to get to the 380, 390 area.
Yeah, long term. I agree with you.
So we've still got some,
like 2 days or 1 day.
Yeah, exactly. Like tomorrow afternoon. I think we'll get sells down to this area, because the way we opened up again, we had it a couple of months ago. I think we had it in April, if I'm not mistaken, where we opened the month, the week, and the day without a wick, and we've got that right here. So I think that's going to be an area that price is going to want to come back and kind of find equilibrium. So we'll see. But yeah, obviously we've got the news for the for PMI coming out later as well, and there is some supposed speech of some kind from Jerome Powell later on.
Yeah, but isn't that like something really, at a university or something where he's talking?
Yeah, but
I don't think that's like
all he has to do is sneeze, and everyone goes, "Oh my God, Powell's dead! Sell the dollar!" You know, so
true.
Anything can happen. So
LJ, welcome.
How you doing?
Good. How are you?
Doing well. I'm sure
you're done. You're done celebrating Oscar again, or?
Yeah. No. And dude, Max.
Yeah, that guy is the definition of insanity, you know.
Those of you,
like, I thought like
they are talking about
I don't know
Formula
what
One.
they were doing, honestly.
I would have expected that, like from a 15-year-old guy, but not an adult.
Just kicking a fuss. Yeah. They definitely just should have left him on the soft tires though, and he could have just finished out, the race.
Yeah,
just
really. That was like switching to hard tires. Yeah, crazy. Terrible but one decision. Of the more entertaining races, especially after Monaco.
Yeah, definitely. Yeah. Oh, yeah. Monaco's too boring. F2 was the only exciting thing with the massive pile up.
All right, guys, I'm going to leave you to it and going to get some lunch now. Have fun and happy trading and happy, hopefully not the orange guy tweeting too much BS today.
Yeah, we'll see.
It screws up our dollar positions.
Yes,
indeed.
Yeah, I'm sure you're very happy to see Dolly coming.
Man, I had the sweat pearls already forming on my forehead last week. Man, but no, it's all good. It's all cool.
Yeah. We're looking in good spot. So
we are.
Yeah.
Alrighty.
All right, cheers.
Cheers, everybody.
Cheers,
take care.
Bye. Alrighty, guys, give us a minute. We're just going to reset for a second for our ABL session, and we will be right back after this. There we go. That's what we need. That's what I need to feel better. I just needed that. I needed that ABL oomph to wake me up. And then I'm all good. So yeah, we'll see. I don't like what EU's doing right now. I'm not happy with that at all. Really not happy with that. In fact, I might just close my trade right there because
you sure?
I did.
Yeah, you did.
But I think we are now going long. Let's see. Actually, no, I still think shorts are okay, but I was in profit, so I took the profit and let's see. 15
just
minute.
Coming back to that. This is that first point of contact that I measured out that we're talking about ABL. So I would like to see it go longer. But yeah, similar deal. I'll close out soon if we don't power on.
Yeah. We've got an area here, which was a nice wickless candle. So we might just come to this to take that before we sell off.
Yeah, I got in at 32. So
on a buy, yeah?
On a sell. I was looking down for 114.10 and then 114 itself around there. Yeah. 114.15 was that first point of contact. But yeah, I don't know. It's hard to say if we'll get down that far. I think there is still some more in it. If I look at I mean, dollar yen looks like we want to come up a little bit further as well. We haven't had really much of a retrace there. It's tough.
We have got some nice high kind of major liquidity up here on even just the 5 minute. We've got this double top here, so but we're not really, we haven't formed anything of great significance, so we might just be looking for a retest of this up here. I don't know if it'll go that far. We've got anything else elsewhere? We've got this one here, so it could be that we see a reversal actually, rather than coming all the way up there. We might see a reversal in this area here, which would have been my drawdown. So I'd much rather be marginally in profit than risk going into drawdown. Yeah. So look, if you look on the 11 minutes, we've got a nice change of direction here. Tests the wick, pushes down. Got this inside bar here, which is the major liquidity that's probably going to come for later when New York opens. But I do think we're going to come down to retest this low, this nice little kind of just point where it just stopped and thought about it for a minute. But we'll see. It's not been able to take this low on the 11. So this could have just been, an attempt to draw people in to sells. We'll see. But I think if I was going to zoom in, we'll be looking somewhere like here. That one right in there. It might be a nice one to get into. So if it comes into here, that would be a nasty little trade, wouldn't it? Look at that. Stick a stop loss there and just take it down.
Yeah, I think we should get that little bit further lower, ideally.
But this, guys, I've been away for a week off sick. I'm still sick, so this is not a signal. If anyone takes this as a signal, you're a fool. You're crazy. This is not a signal service. This is a very professional, important stream where we talk about anything and everything, including Formula One. But yeah, so that might be a nice one just to look at, because you've got this. The reason I like it is you've got this engulfing candle here that wasn't respected. It just smashed through it, so it still acts as a really key area. And then because it's in that wider area that I mentioned on the 11 minute, which is this, then it could be that it's very, very often that's even on the 1 minute. I know people say there's a lot of noise. The areas still matter because of the way that algos work with the various different banks. Had a very interesting conversation with a guy last week whilst I was off sick, but I did have a conversation with a guy who used to work for Morgan Stanley, Goldman Sachs, and a bunch of other, Deutsche Bank and a bunch of others. And he was one of the very few first people that wrote the algo systems back in the early 2000s. So, yeah, very interesting guy. Very, very interesting guy. So yeah, we'll see. It might be, it's not doing what I'd really like to see it doing at the moment. It looks like it's actually making the move to go lower already, which doesn't make too much sense.
On mine, it's gone perfectly into the. This is where I have the moving averages mapped out. It's just pulled right back into that.
Yeah.
Tap the top perfectly and rejected off. So, but yeah, the one is just a push and pull, bit of a waft between that and dollar yen. I think dollar yen does have some more upside to retrace. Hasn't really retraced at all. So it's probably bitten that before people reload, and thus euro, the pound, back down a little further. Gold's also coming down, gradually getting to where I start getting curious about it, between 33.30 and 33.35. So,
got a question here from Rosas. Not sure what candle you're referring to. 7:45 a.m. I don't know what time zone you're in, Rosas, but you got to understand that even on TradingView, I could go in and I could do Euro USD, right? And if I go to Forex, I've got all of these different feeds for Euro USD, right? There's loads of them, okay? Each of them are going to have their own prices. They're each going to have their own candle structures, and you're going to have the same for the 5ers. The 5ers have their own liquidity providers. So the price that they present on MT5 is brought through from those liquidity providers. So you can't necessarily expect that the candles are going to be the same on one versus the other. I don't use my MT5 for analysis. My strategy, my back testing, and everything else that I've done over the last 2.5 years has been using forex.com. It just works for me. What I look for, the setups that I look for, they play out on forex.com. Other people use Oanda. I know Anastasia, for example, uses Oanda because it gives you the volume indicator. So you've got to look at your own kind of approach as to how you want to do it and how you want to manage it. If you're talking about London time 7:15 or 7:45, so that would have been 8:45 my time, so it would have been this one here, 8:45. Yeah, I don't know, mate. I'd have to look and see. I mean, I can't personally see a massive difference, other than the fact that let's see, low was 985. Can't get that one to show up. For some reason I can't see the statistics on that one, but hang on, let's have a look. The low on that one was 986.
Differences between charts will be because of the broker that you're working with. Every single broker has different back-end liquidity providers. It's a whole network of various LPs combined together, and you get like the best aggregate price, but there will be slight differences between them. Not so different to like, particularly if you look at crypto on certain exchanges, one exchange will offer a slightly different price to the next one. Whether you look at crypto.com versus Binance versus, whatever, take your pick. That's because of their back-end liquidity that they're getting through. So
I would
sometimes when you get at opens, there's a slight shift, because there's a sudden injection when the market's about to open or pre-market. But typically extremely rare, extremely minor price differences. Like everything's so liquid. Sometimes you will get it in the morning when there's rollover. Some brokers choose to shut down the feed for like 5 minutes over rollover, so they can process all the swaps, all that kind of stuff, and make sure nothing goes awry. I would say it's probably something like that. But
yeah,
there's no way it can be.
I've just had a look, Rossas, and so on forex.com, the low was 13988, and on MT5, 5 MT5, it was 13985 and 13986. Now, this is why I look at TradingView, because I can see this is actually a perfect double bottom. So the two candles actually have the exact same price. So that's why I'm still looking at sells, and actually looks like a really nice area to sell. So could even be that it might even sell down to here as the next kind of area for reaction, or maybe down to this one, which is the wickless candle. That would be what I'm looking at. This other one that I was talking about looks less appealing, but let's see. It's coming up to that area that I was talking about. Now, I haven't set a trade yet because I can't be as tight. I normally go for market entries on these, so you can see it's come and taken this level here, which was that wickless candle. Question now is it going to go higher to find somewhere to react from, or is it simply going to push on down? Sometimes it just pushes on down because it has come into that wider area that I mentioned on the 11-minute, which is this wick here. So we'll see. Want to see how it plays out at the moment. This one I've closed, so we'll just close that one. But that might be a nice area to sell from. So let me just see if I can find my selling line. Probably from about there. So, but yeah, you Rossas, you've got to understand that you're not going to get the same feed unless you're trading Oanda feed and you're trading Oanda as a broker or something. You're never going to get the same prices because CFDs don't work like that. It's not centralized like futures. If you want to go trade futures, that's a different story, obviously, and that's where you can then get fixed pricing across the board, no matter what your feed is. So yeah. And somebody asked, who was it? Somebody asked, Motocar, why the 5ers doesn't use TradingView for operating. Honestly, I don't know, is the honest answer. I really don't know what the answer is to that. But they've used trading MT5 for as long as I remember. I presume it's probably to do with the fact that they don't have just one single liquidity provider that provides them a data feed. They have multiple liquidity providers. So to then feed that into TradingView would become a much more complex beast than having it feed into MT5. That's my assumption. MetaTrader is the most widely used platform on the planet. Has been for almost 2 decades now. All the back-end stuff, all the infrastructure, all of the underground technical plumbing that you don't see in the background to facilitate orders and put them through to market, all that kind of thing, connect all the infrastructure systems. That all exists and works very well and very efficiently with MetaTrader, which is also one of the reasons why it's stuck around. And despite it now, being a bit older compared to other platforms, that's why people still stick with it, because it works really well. It functions when you need it to function, that kind of stuff. TradingView's only sort of popped up, fairly recently. So having all that back-end integration is a whole nother question. Yeah. I'm just playing with the trade ideas, but that's not valid because it's taken that inside bar there. So I'll wait and see if I don't expect this to be the move because we've started again with 2 wickless candles here and here. So it doesn't really make much sense. Let's just leave that like that. We could see a bit of a flick up from here. Or we might just come down and test these lows again. We'll see. See how it plays out.
Yeah, I'm still short euro, currently short Aussie dollar as well, and then I'm long the NASDAQ at the minute. A bit of a pullback. So gold, I'd be curious about getting long sometime, but we've not pulled back deep enough for me to consider that.
Direx's gun is, this isn't an area of my expertise, so it might be one that you can pick up, LJ. Is can you explain a little bit about the concept of trading using fractals?
It depends what type of fractals you mean, because there's, the market being fractal in the sense that things at higher time frames replicate on lower time frames and vice versa. The sort of similar structures, larger macro plays then show themselves, represent themselves in that larger framework, whether you go to a daily or weekly, that kind of stuff. And then you also pull that into the intraday stuff, and you'll see a similar framework playing out on lower time frames. So it's either whether you're talking about that or you're talking about fractals in terms of, people talk about, strange things, in my opinion, with like harmonics and weird shark patterns and all sorts of things. I'm not sure if that's what you're talking about. If we're talking about that stuff, if you ask me, it's a little bit nonsense. Like, it's just, coming up with wild stuff to, connect this point to that point and draw astrology.
It's all hoodoo voodoo as far as LJ is concerned.
Yeah. As far as any kind of fractal thing that actually works, if that's what we're talking about, your best bet is like Fibonacci retracement, which, because basically what they are is just a discount on the current price move. And so, if you're observing a certain shift in the market and you're wanting to get in and express that same view, getting in on a discount is a good way to enter that from a risk reward standpoint. So that's why that stuff works, and you get these pullbacks and extensions.
Sorry, I just need to blow my nose before it.
Yeah, so if you're talking about the patterns you see on the lower time frame, on the high time frame, it's basically just sort of, you have like buckets of liquidity, right? So say you've got, if we think about the large players, so not retail, not that kind of stuff, retail and such makes up, I don't know, I think it's like 6% of total trading volume or something daily. As far as moving markets, it's not going to do anything. The larger institutions and firms are trying to move large sums of money. So in order for them to get appropriate pricing and not just eat up every single contract that is currently on order on the book, they need to gradually piece these things in, right? So say you've got a massive block order, they might take over the day to gradually keep buying up say it's euro dollar, or say it's Aussie dollar or something else, incrementally, and try to get as close to the best average price for the lot as they can. So that's why you often get, they incrementally buy, other people see buying, thing moves up, they go, okay, this has gone too far, we want to wait and see if we can get a better average price. No buyers left, pull back, they go, okay, this is better average price now, and they start buying again. And so essentially you're just seeing all of the collective block orders of that on a smaller time frame. Once you go out to a larger time frame, you're essentially aggregating everyone doing a similar thing in their own manner, and it sort of becomes this, like, eventually this law of large numbers. So you're just viewing the individual components that make up the larger whole at each time set.
So EU still holding that low, this structure that it's got here, hasn't broken this one, so it's still messing around with a few people. So we'll see. So I think this sell order up here could still come into play. So we'll see. The way that it's just wicked just like that. See.
Yeah, like Void was saying, is basically the hallmark of particularly currency trading is mean reversion. So you've always got one currency moving one way, then you've got a tug of war between both sides, and then you tend to move back the other way because every country works on similar metrics in terms of how you measure things, whether it be CPI, PMIs, employment rates, all that kind of stuff. So you're getting this constant oscillation back and forth between the changing prices between the two countries, including then the other dynamics going on with geopolitics, all that kind of stuff. So that tug of war back and forth tends to create similar things on both ends. And then hence when you just scale it out to a larger time frame, you're just observing the smaller bits aggregated in one larger frame. Just like if you were to go and look at a pile of dirt, it looks all bumpy and stuff. You zoom out, you've got a mountain, looks all bumpy, you know, and then you go further out, it looks smooth, and you go to space, it looks smooth, and the Earth is round. So if you view it in that kind of same way, you're just zooming in to see the incremental little rocks and that sort of thing. If that makes sense, I guess. Hopefully that's an all right analogy. You'll see things different in stocks sometimes because stocks can have such strong like fundamentals with business shift and with revenue and ongoing increases in revenue that they don't even look back, right? They just start running, everyone piles in, and you know, price just goes. And so they'll show far fewer fractal type trading patterns in nature until, say, you've got some kind of more mature stock where it is being, you know, traded a bit back and forth. But if you've got something like a growth stock, you know, it can just go forever.
Just taking a quick buy. We'll see how far it goes. But I can see us coming to retest this high. So we'll see how it plays out. Director's Gun says that's what really freaked me out once because I think it was a graph of Aussie US and I was just about with it and drew a possible path and price literally smashed it in my prediction. Love it when that happens.
Yeah, I was about to say that's good, right? Like that's what you want. That's what we're looking for. Hey.
Exactly that.
I think Barack was throwing one there as well.
Hey guys, love the chill stream. Question for you both: how would you describe your trading strategies, timeframes, and how do they reflect your personalities? Oh man, that's a long question. LJ, you go first.
Okay.
We're both sick, guys, so you're gonna have to be easy on these questions.
So for myself, personalities, like I guess mine is more sort of setting mine up around, I guess how I prefer to structure my day, and then so because of that, I'll have various types of strategies that will be more, say, some that more require me to sit on the charts and really like be active, be observing things as they go throughout the day, like by the minute, that kind of stuff. And then I've got a few other trading styles which will be a bit more swing or smaller positions or structures or things that have some kind of hedge component to them between various assets or completely uncorrelated assets that allow me to then sort of step away from the charts a bit more if I've got to go do some other stuff. And you know, I don't have to worry about something going nuclear. As far as personality wise, I'm happy to be in the thick of it, in the mud, go and, you know, have the intensity dialed right up to 10. I'm also happy to just be chill with things. I sort of slide, you know, right across the thing. It's more dependent on outside things needing my time and attention that'll vary where that slider goes, and then how much I can give to that and give to time on the charts and that sort of thing.
LJ is like a chameleon. He's like a chameleon in the markets, right? He just adjusts and adapts to whatever the markets and life throws at him. And I don't know how he does it. I really don't know how he does it. My trading, I've only been trading for 2.5 years, so I'm still relatively new to this mad old game that we play. I am not. I'm definitely not a swing trader. I don't have the patience for swing trading. I prefer to see opportunities in and out, and thanks very much. I generally tend to get bias spot on, but I like a high risk to reward. So I'll see an opportunity and I'll go for it. With maybe a 1%, and then just try and smash it, which probably isn't the best way to do it. So I've been trying to change that over the last few months, to not be so, like for example, if I risk 1% on this trade that I'm waiting to play out here, this bigger one, right? It's a 41, I think it's a 41R. If that 41R comes out, there's no need for me to risk 1% on that. So I can risk 0.1% and I'll still have a massive win. So that's what I've been trying to play with, and adjust my approach to, because when I do get these trades, LJ and the guys, have seen them. When I do get them, they are killer trades. But I have a lot of other stuff outside of trading that needs my attention, like LJ, like everyone. I've got two little kids. I've got a cafe business, other bits and pieces. So I think the problem is with trading is it's very, very hard, very, very hard to try and make trading your sole income. It takes a long time to do it, and you have to be so good. Not so much technically, but psychologically. It can be a real drain on you psychologically, and so I would say you've got to really kind of figure out your personality to try and fit it to what works, but not just what your personality is, but what your personality is like under pressure and under stress, and what your personal situation is. You've got to try and fit it in to all the other stuff that you got going on, and that's the hard part with trading. That's the really hard part with trading. Is loads and loads of people think, I can make millions overnight. Doesn't work like that. I've been trading for 2.5 years. I'm not profitable. I've made profits on paper, but I haven't had a payout yet. So you've got to put in the time and the effort and the energy. And Scruffy Trader, anyone who knows Scruffy, Gary Langley, he says it best. You've got to treat it like a job. If you really, really want trading to succeed, you've got to treat it properly and professionally, and treat it like a job, and take it seriously, and not gamble it away and everything else. Those who try and game it and gamble away, those are the ones who tend to miss out. So yeah. So hopefully that answers your question. Is this kind of positioning allowed in funded trading? I'm not sure I understand what you mean, just fun. I
assume possibly means the setup that you have, like very, very, very tight stop.
Yeah, absolutely. Yeah, it's, trade what you see. You want to have tight,
as long as you're not doing it with 2-3% risk on one single thing like that, on 4 points stop loss or something small, that would be far too much. That won't. Don't go. No credible trader would ever see that as legitimate, because that's not going to work out over the long term.
Don't go and take this trade here, this 41R, right? So don't go and take this trade and stick 5% on it, because that's just suicidal on a funded account, right? If you want to go and look at how to trade a funded account, you treat it like it was, like it was your job. Treat it like you were working for a bank and they gave you the money and these were the rules for your job, and then go from there. Others have different ways of doing it, each to their own, but yeah, it looks like that's going to go to TP, which is nice. So that's a nice 0.5% up overall, and still waiting for this one to play out. I still think this one's got some validity to it. The way the 1 minute candles are closing, they're closing without significant wicks to them. The real test is going to be, are we going to see a trade like this, where it just basically just tests this wick and goes down, or are we going to see the higher one? And that's why it's then you risk, like I say, 0.1%. 0.1% times 38. I'll happily take that.
Indeed.
So you just got to see how these things play out.
Like you were saying, Henry, yeah, if that's what Just One was meaning, then we're not talking about hedging between cross accounts. Like, say you've got multiple accounts with prop firms and you try and hedge both sides, like that won't be allowed. You'll get banned immediately from any firm out there. But talking about hedging, and this is where people get this mixed up sometimes, within the same account, in terms of, say, you're trading one asset that per an implied move should move up. If there's a negative move, or say something bad happens with Trump, right? You expect euro-dollar to go up, you expect dollar-yen to go down, right? You can trade them inverse, so that, say, you want to express a long dollar position, but in case X happens, right, you also go long euro, so that they sort of balance each other out. That's completely different, because you are expressing two different views, say per the market structure, that kind of thing, but you can hedge out, say, headline risk based on some kind of asset doing that. Or another example would be trading gold, having a long gold position. And this gets into more complex ways of trading. You got to structure these things well. You've really got to know how these assets react per the number of combinations or permutations of possibilities that you're thinking about, and so that gets into a larger, deeper, more complex thing. But
just fun. I'm not hedging. The hedging, the long and short positions on the same instrument, right? There are a lot of people that try and scam the prop firms, right? And they'll open up an account with one prop firm, and they'll open up an account with another prop firm, and then they'll long one instrument on one of them, and then they'll short it on the other one, right? And they just hedge them against one another. That's what's not allowed. What I'm doing is I'm just scalping, right? If you look at this trade was based on this structure here on the 1 minute. This trade isn't open yet. It hasn't been triggered yet. It's just a trade idea, which I may or may not take, depending on what the reaction is to this zone up here. So I'm not...
it's just mapping out the trades. Like the price hasn't even hit that level yet. It's just a hypothetical trade idea of possibilities, right?
So this is essentially a sell limit, right? The other thing is these are very often, because I don't trade with TradingView, you as you can see, I'm pressing buy and sell on TradingView. I've got my MT5 terminal here separately, and that's what I trade on. So sometimes what I do is I just set out a trade idea, and if I see the setup form, then I'll open up a position. If it doesn't form, then I won't go for it. So that's why I just have it here to say, right, okay, we've come into this. This was the idea. Okay, the setup's there. Right, let's go. I go to MT5 and I set the trade up. That's how I do it. But this is just scalping. This is all this is, right? Essentially, this is just me saying, right, okay, I can see price is going to bounce off this area here and push on up. And I think this is a nice area for price to sell from. I do think sells are still good, and the reason I still think, because that one's actually gone to take profit, so that one we can take off. We've got this 15-minute double bottom, which somebody was mentioning earlier about MT5 and the candle prices and everything else. On myforex.com, it's a perfect equal low. So that's why I'm looking at sells now. I'm just looking at this now. What happened here earlier? We can see that we had this nice big engulfing candles. Actually, this might be a nice area for buyers to get in. So probably this trade here isn't going to be as optimistic as I had hoped, and it might be something a bit more like a take profit of up there, which gives us still a nice, what's it going to be? 32R. I guess I could accept 32R if it plays out. If it plays out, it might not play out. But that's why I put it on the chart and I wait and see, can I see a wick reaction on the 1 minute forming at that level? If it does, then fantastic. If it doesn't, then nothing ventured, nothing gained. So I'm just going to mark this one out to see how it plays out, because it is coming close to that area now. We've taken out this area here. We're coming into a nice area of resistance. So let's see how it plays out.
But yeah, M-River, yeah, I do. I'm a full-time trader. I've been trading now, 12 and a half.
He drives a Lambo. He drives a Lambo. He drives a Lambo.
But yeah, so
it's actually an old BMW just with a Lambo badge on it, but he technically drives a Lambo.
God, that'd be terrible. Kill me now. That'd be shocking. But no, I've been trading full time for a while now. That's my main thing. Picked it up a long time ago when I was at uni, and then sort of stuff just kicked on. And so yeah, that's what I do. I've traded just about everything under the sun at various given points. Went through all the back end follow-on stuff of the whole European debt crisis. Early days of Bitcoin, first running up, then towards Brexit, that sort of thing. First Trump term, and him actually winning the election, of course. Right through that to, tariff tantrums, QE1, QE2, QE3, tariff tantrums, quantitative easing, QE tantrum, the initial tariff tantrum, then COVID, then rates rising, all that stuff, and now here we are with today's Trump 2.0. So yeah, been through it all.
Let's see.
How do you manage overtrading? I would say set out your expectations, I think. So before you ever go into a trade, you should always be very aware, very thoughtful, very conscious of why you're even entering the trade. Is it just because you're trying to get some action, you feel like you need to trade, like you're being, you're seeing things happen and going like, oh, I missed that run up, I missed this, etc. Because if that's sort of what it is, if you're trading out of like a FOMO type thing, or perhaps maybe you took some earlier trades and you've taken some L's, and now you feel like you got a sort of revenge trade and clean back up the dollars that you lost earlier. Always ask that question before you click the mouse and punch on into the trade, right? If you ask yourself that, you should be able to catch yourself with it. What I would say though, if you are in that and maybe you've started doing it and then you sort of pick up on it too late, I would say just look, punch it there, close out what you have on the board if it's reasonable to do, and maybe just like jump up, take a break, don't even look at the charts for 20, 30, 40 minutes or something. Have a coffee, have a water, have whatever, walk around your house or go outside for a bit and just sort of take a breather, do nothing to your trading, reset, and then you can consider coming back to the charts and then having a look at it with fresh eyes. So then all of a sudden you might go like, oh yeah, I was looking at that before, and why was I thinking that was a good setup or good structure or a good idea whatsoever? You'll come back to it later and go, God, yeah, I was being a bit too rash, right? And then you should be able to come back with better eyes.
Henry, LJ was the one who started GameStop, right? LJ was the one that started the movement. There wouldn't have been a GameStop if it wasn't for LJ.
I did actually take some long options on GameStop when that was popping off, and then also shorts towards the end at the time. But dude, GameStop was too heavy, and then even the options, it was hard to price stuff because there was so much vol that the appropriate pricing for options was like hard to gauge, you know, sensibly anyway, right? Unless you want to just go wild west, but yeah.
River, occasionally, yes. The long that I had earlier, that I took down here, I entered once here, and then I entered again here. So because it came down to my entry. So yes, occasionally when I'm convinced that yes, the trade is still valid and the idea is still valid, then yes, I'll add to positions. I don't necessarily do it on the way up though, unless it's a really strong move that I've been analyzing on multiple time frames, and I'm convinced that it's just going to go higher. So then I'll look for it to pull back to a certain point and then add into it there, but it doesn't happen that often. So we're coming up to that area. We haven't tagged it yet. Yeah,
almost.
Oh, look at that! Hang on, I need to see. Is it gonna tag me in? I mean, this isn't. Yeah, so it's going. I'm gonna sell.
Have you set the order on MT5?
I'm selling.
Yeah.
So on trading view, it didn't get triggered, but actually if I'd set the entry on the line, then it would have been okay. So we'll see. But yeah, I'm in the sell right now.
But yeah, so adding to winning trades, I will add. It always depends though, because it depends on how you've sized it as well, because obviously if you add to the trade, you're completely changing the entire risk profile of the trade, right? And the same thing, even if you've got a trade that is running and in profit, that trade in and of itself, now the risk profile changes because price has already moved away from your entry. So that's without you adding to the trade whatsoever. So generally what I will prefer to do is chop it up into pieces, and I'll go part in and then add to my full size. If there's something really convincing, and you've got immense momentum, and you've got the kind of structure set up that say, just say euro-dollar, for instance, there's a huge amount of height and basically a giant air pocket above. So you can see clear levels that, hey, if we break through here, it's likely to just run stops. And you could see this coming up, another 50, 60, 70, 80, 100 points or something. Then yes, I will potentially add. But at the same time, you always got to adjust your risk with that. So I'll try to, at the same time, bring up the stops on whatever other positions I have in. Potentially bring up the original position into profit. So at worst, stuff falls back. I'm either for a small profit or net flat, right? So therefore, you're not just outwardly increasing your risk, and the market just pulls back, even though you're correct. Because then you can lose your shirt on something that you are otherwise correct on, right? And that's how you turn a good trade into a bad one, if you do that the wrong way.
So that idea didn't hold. It broke the high of this candle here. So close that with a 0.25 risk loss, 0.25%, but still up 0.2%. So not terrible, but not wonderful either. Next trade idea, although I don't really like it because it breaks this area here and this candle, it could be, there's two ideas that I've got. One is anywhere in this area here and selling with our stops just above it, something like that. So, taking us down to there, and the other one is hasn't quite probably come up to that area of it. It hasn't yet. The other one would be a sell from up here. So we come and test this week. But I don't feel as confident with this one as I do with that one. It's possible, but that's the other trade idea.
Yeah, man, Punjabi. Supply and demand is good. I mean, that's a hallmark. You're just trading the sort of larger order levels where you've had a clear shift in directional momentum of the asset, you know, per previous trading history, previous days. So you'll get larger volume, people being in at those points. I definitely use pivot points myself. They're really good. Just as generally scoping out your sort of expected range for the day. And what you can add is certainly a fib retracement, no doubt. So the other part, if you're finding things go against you, I would also say you might need to sketch out your overall bias or direction for the market using perhaps a few other assets in combination with that. So you'll often see that, say, the euro and the pound follow a semi-similar structure. They're not 100% correlated, obviously. But if you look at euro dollar, pound dollar, Aussie dollar, dollar yen, right, they'll all have a similar structure and directional movement per the dollar aspect of it, right? Any distortions you see in that will be relative to the individual other currency that is paired with that. Say if you've got European data or data from the UK coming out, that might shift one side more than the other because it's purely based on that UK component or Euro component, etc. So probably check some of those other bits and pieces and have a look at, say, like dollar index, that kind of thing, and see what you can see from that.
Henry, that's far too boring. Why would I do that? Why would I? Have you only just met me, Henry? Have I just come into your life, or have you got a bit of amnesia, or what's going on? Me? Set my stops all the way up here? I mean, it's not even on my chart right now. I've got to drag it down. Look, you're saying put my stops all the way up here? Henry,
yeah, not my style, Henry.
That's not how I do it. That's not how I do it. Surely you know that by now. Look, see, we've got two trade ideas. One could play out here, and the other one could play out here. Let's see. Just got to wait and see. This one currently not validated on the 1 minute. Let's put them down to the bottom. And KKK on the US dollar. LJ is the man for the USD JPY. So yeah, but I can see some strength coming back into it because it's just sold off. Like it's literally just, it's as if somebody just set fire to it and it's just melted all day. I mean, just look at it. That's the 1 minute. Look at the 15 minute. That's just it's. I don't think it's going to catch any strength now until 142.200, which I think what you said actually, LJ, wasn't it? So yeah. But
yeah.
what do you think?
About here we were. See if I can chuck my screen up maybe for a bit.
There we go.
So we were talking about this earlier on ABL this morning, and about this 142.60 to 142.40 area was what I had marked out as a potential point to pause. We had the sort of break of this high sort of area up here earlier today, and hence it's fallen off like a bit of a waterfall.
Taking that sell, by the way, in euro.
Yeah.
Yeah.
Cool. I'm still short, so we go out to longer time frame here on the daily. We can see we've got this larger structure up here. We've sort of been range bound, like point to point through this. Now, if we go zoom back in a little bit, we've had a few attempts to sort of come higher, but nothing convincing. Every time we sell off pretty heavily, sell off again, and it's very sustained, just continual selling. we're getting a further push into that this week. You could see a bit of a pause here before we ultimately break and run much lower. Go out to a weekly here. So as far as the weekly, this larger structure that we've had up in the sort of 142 and at peak up there about 161, it looks as though we are potentially seeing a breakdown of this high range and back down into sort of the 128 to 140 kind of range, right? That's also lines up with current positioning on dollar index as a whole. We're just seeing general dollar weakness across the board. And also per the current rate differential change with the Japanese long-dated yields, we've seen them run up massively. We've also got the forward pressure coming in now that potentially we'll start looking forward to, oops, I went off that again, towards potential rate cuts. As we've seen the US consumer start to weaken in a bunch of the data we saw last week from GDP and a few other the components through retail sales and that sort of thing as well. If you go and have a look at any of the debt profile and delinquencies on, say, consumer debt, whether it's autos, mortgages, that kind of stuff, it's begun to start heavily rising. So we had a few peaks and troughs, but held together. Now it's really started rapidly coming up. And there's a bit of concern being expressed in consumer sentiment. Obviously, everything going on with tariffs doesn't help the consumer's general outlook when they hear a lot of things on, from the news and media, that kind of stuff. So all of it feeds into further selling of the dollar. Now, intraday, with that, we have come down quite heavily. Similar deal to how Mike was looking at the euro before. I would expect a bit of a pause and potential pullback here. 142.65 was exactly the initial level that I mentioned in ABL earlier. Got this lower level. This is basically a target area. I'd see a pullback. You could test the underside of up here potentially on a larger pullback. Otherwise, about midpoint of that range at somewhere about 143 before a continuation of the drop. So if you wanted to take a shot on a potential, short-term reversal here from the dips we've had today, it's not a bad idea. You've got something about 30 points or something up into these highs, about 96, and potentially running up a bit higher. But yeah, overall, I would still lean short the dollar. But at the moment, for the day, we have pushed that envelope pretty far already.
Yeah, I would be looking for buys on, for example, on Euro USD. I'd be looking for buys once we get down to this area here. So this is the trade that I'm in. My entry actually wasn't as clean as that because I did a market order entry. So it's actually just there. So almost, 7.5 hour. So I can't, with my strategy, I can't do them as set limit, sell limits or buy limits or anything like that because the structure that I have and the analysis I have is very, very precise on forex.com. And obviously the pricing is different on MT5. So I just have to go in at whatever price I can get on MT5. So that's why I have, I went out and plumped out for trade dashboard MT5, which is a paid one, but it is by far the best trade manager out there for MT5, by far. You can manage your risk. You've got news. You've got, you can manage all of your positions in one place. You can close them all in one go. You can do all sorts, and it's all right there on your chart. It's a really, really good one. It's called Trade Dashboard MT5. I don't have any affiliation with it. I don't have any affiliate links for it, I'm afraid. And as I say, you do need to pay for it, but it's a one-time fee, I think, and then you get the updates for life. And since I got it end of last year, I think it was, there's been multiple updates to it. I know Daniel, who many of you will know from the Discord and from ABL, he uses it as well. So no, it's a very, very good Very, very powerful EA tool to help you manage your trades. So I use that. So I'll basically have a line on the chart which has my entry. So I've got my market entry. I can set my stop loss wherever I want it as a line entry. So essentially like these, but the market entry price is moving with where market price is. And then I just click sell or buy, and away we go. So, but right now, looking good at a 1% profit so far. So risked 0.5% on this one, and got a 1% return so far. So we'll see.
Nice. That's good. Yeah, still holding short myself. Hopefully we'll get that lower target I was looking for. So,
what was your lower target again?
About 114, like 114.02.
Yeah.
And then ideally, if we can see 113.90, it just depends how much we sort of accelerate there, or if we stop at the sort of round block level.
Mm-hmm. Yeah. So I'm currently doing this on a high stakes 5K account, 5K high stakes account. You know, some of these trades can help you pass the challenge, but then you've still got to remember that you've got to do 0.5% profit for 3 days. So depending on how you trade, you know, you can spend ages on swinging and swing trades and pass challenges that way, and you can do it really quickly. I'm not going to lie to you guys. I'm open and transparent. I've blown more accounts than I've probably had hot dinners. I have spent an obscene amount of money with the 5ers. That's probably why they asked me to come onto live streams. They're like, well, you know, he's given us so much money, we might as well get him on the live streams. But I have blown an obscene amount of accounts. But the way I look at it is that that's my education. So I'm one of those people that learns by doing rather than learns by reading and going, oh, right, okay, let me understand this theory and that theory. I'd much rather look at it and do it and you know, learn the hard way. The school of hard knocks, as they call it, I suppose. So yeah. And Haresh, I don't know. I mean, dudes, I love you, man. Thank you. But all it is I don't have my glasses because my sinuses are still really, really painful, and I shaved. That's what it is. I don't have the big grizzly beard, which was much to the dismay of my kids when they came back from seeing their grandparents over the weekend. Because it suddenly went to like 28 degrees here, which I know is nothing for many of you, but for me, that's way too hot. And I was like, no. Grizzly daddy, short beard, please. Time to chop it off. But of course, it then makes it all bristly and sharp, and the kids don't like that. So, but anyway, never mind. But thank you, Harish. It's lovely to see you, my man. Yeah,
you sort of grow it out, and then like clean shave. And you just feel that, brush of like cool air.
I'm just like, ooh.
Yeah.
I'm not allowed to shave it off completely. I've been told that divorce is on the cards if I shave it off completely. So I did it once as a dare from a mate of mine. And oh mate, cold shoulder. I could have frozen to death from that thing. It was not good.
Oh man.
But yeah. I do think though, I do wonder whether maybe the shorter beard is, you know, is my lucky charm, you know.
Yeah.
I've had a longer beard for quite a while now. Trading wasn't going my way. I've come back today and look at this, catching trade like this. So nice. Maybe it's the short beard. That's what it is, guys. If you want to be a successful trader, you need a short beard. Go Grizzly.
I always go through periods of longer, shorter. It's changed my mind all the time.
We have hit this funny area where we've bounced off this again. Now,
Dr. House look.
Oh, don't, Barack. Do you know what, Barack? It's ironic you should say that, but many years ago, which I don't know if it's an insult or not, but when Dr. House was really popular, some people that I worked with used to joke that I looked like him. And I mean, I was like 10 years younger than, no, even in fact more than 10 years younger than I am right now, and I'm in my 40s now. And Hugh Laurie was in his 40s or 50s at that point, so it wasn't the best of compliments, but people used to say that I used to look like House. So yeah, but of course I don't have his fake American accent. I would never even want to try and do a fake American accent. That would just be disastrous. So yeah. Whilst we wait for that to move around and do something, let's go and see what gold is doing. The gold has broken the highs that we had earlier.
You guys need to punch like on the stream as well, because
yes,
I'm pretty sure we're getting close to like a couple milestones, and Jonatan wants to give away more giveaway stuff to you guys. So smash that button. So you guys get giveaways.
Jonatan wants to give away giveaways. Jonathan wants to give away giveaways. So if you want him to give away a giveaway, then make sure you smash that like and subscribe as well, because we hit 70,000 subscribers. This is ridiculous. I mean, I think I remember when he did the celebration of like 40,000 or 45,000, and now we're at like 70,000. So yeah, it's absolutely crazy. But yeah, let's.
Yeah, so more you guys punch that, he'll do more giveaways. So.
Yeah, exactly.
It's all for you guys. Yeah, gold. Check out gold. I was short a little bit earlier. Was ideally looking for 33.35 to 33.30, but we sort of stalled out by that 33.45 level. So I just took it for small profit there. We seem to be having another run at the highs from earlier. So the question is whether this will actually sustain, or it's just like a secondary sort of run, get a bit of a blow off top, and then it just falls off after that. Coming up towards US session now, getting closer. So
Henry, I'm not sure. Do you get a silver creator award at 100,000? Maybe we do. Maybe we do. I wonder where Jonatan would hang it, because Jonatan doesn't have much wall space anymore because he's hung so much else on the wall in his basement where he streams from. So I don't know. He'd have to find somewhere to hang it from. EU is pushing further down. Here we go. There she goes. That's what we want to see. Tried to bounce off this area here, and it's pushed further. So yeah.
Yeah, very nice. Still sitting long NASDAQ myself as well. Sort of stalled out a little bit here at the minute. We've had a bit of a push up. I got in at quite a nice level though. When did I get in? 21,182. So ideally looking for about 21,300 on the NASDAQ there. But yeah, indices at the minute are touch and go, so you got to be ready to pull out as well, because I think we are due for that bit of a pullback. Been looking for that on indices for a little bit. At some point we get about a 4 to 5% pullback from the recent highs that we've had, just given the large degree of concern and uncertainty we've still got out there. We managed to survive last week with the Nvidia earnings. We didn't have too much of a stir up with that. But yeah, now going forward, especially Trump being pressed with this whole taco thing, whether he's going to chicken out and all that, we could see him lift the tariffs on China again if they keep refusing to play ball, just like he further lifted them on the EU shortly ago. So if we get a headline like that, I'm sure you would see indices getting smashed. So, income idea, is there any giveaway? Not at the minute. Basically, if you guys keep smashing like on the stream, then yes, Jonatan is always watching that stuff. He tracks that stuff, and then basically we'll give you guys giveaways. So that stuff all runs through him, though. We don't have direct control over that, but that's basically how that works. So if you keep coming in, keep smashing like on it, then you get some giveaways.
Yeah, there'll be giveaways of giveaways. That's how it works. So, but income idea. What's your income idea? I'm curious. What idea do you have for income, or is your income giveaways? Let us know if you got an income idea. I'm curious. So we'll see. We still have breaking that level.
Yeah, we do have PMIs tonight as well from the US later, so that will be
just over 2 hours.
Yeah,
2 hours and 15 minutes, I think. So,
and dollar yen has come pretty perfectly into that 142.65 we highlighted on ABL. I was looking for. Had a little bit of bounce there as the euro's also been falling in line with that and dropping back a touch. So the question is, whether that can accelerate a little bit coming into towards the US Open. Look to take a bit of a profit on those intraday and then potentially reverse the move.
Somebody was asking, and I can't remember who it was. Partials, AV. Ask Henry. Henry will tell you, I don't do partials. Oh, it's crazy talk. Partials. Hell no. What I was going to say was, I can't remember who it was, somebody was saying about going in for multiple entries. I can see if we do pull back, because we've got this little wick here, we've broken the structure. And so what we could do is we could see price come back and retest this area here. If it does, then that might be a nice area for another sell opportunity. So, Milad, I am sorry to hear that, my friend. I have been there 6 times, and 6 times it has hurt profusely. So you have my deepest sympathies, my friend. But the thing to remember is you got there, so you can do it again. And unlike me, you will not blow it 6 times or 5 more times, and you will get a payout. So keep the faith, and you'll be getting there very soon. My idea is to get a giveaway just once, then I will show you. Okay. So the income idea is 1 giveaway, and then another idea. Okay. Whatever works for you, my friend. Whatever works for you. Yeah, see, we've got this nice reaction on these wicks right now. So, I mean, you could really scalp really quickly, take an entry up to this area here with the stops below for less than a 1 hour. But I'm not sure if it's worth it. Risk management. Don't know who you're talking to, Adam, but yes, very important risk management. Aussie dollar, use US dollar. LJ controls the Aussie dollar from Brisbane down under, along with Henry as his fellow degenerate. Can you tell us, guys? Are you gonna sell off your Aussie holdings and buy up some US dollar?
I am currently sitting short Aussie dollar alongside the euro. Also sitting there in case of a headline at all from Trump around China or anything. Aussie dollar is likely to get knocked, whereas euro likely to then run up, continuing same story that we've had with all the past headlines coming out as well. As far as what we're currently doing intraday, it's also just like the euro and the pound and everything. We're due for a bit of a pullback after the big run up today. So yeah, similar deal. Where I'm targeting right now is not too far, only about 10 points, 15 points, just a bit of a scalp for the day, down to about 64.70. If we can see a increase in momentum from there, potentially a bit further, but I'm basically short from 64.86 with a stop at 64.92. So that's my trade I'm sitting in on the Aussie dollar at the minute. Overall though, going forward, I would look for Aussie dollar to continue higher, trying to establish a bit of a higher range on the Aussie dollar. It's very back and forth. If you go out to a daily time frame, you'll see there's a bit of a channel, upper channel that has formed, the slight tilt heading higher, and we're basically ping-ponging between that range. So I'd have a look at that just for any breakouts either side. Until then, played the range. It's worked out quite nicely for 2, 3, almost 4 weeks now, actually. So yeah, that's been a very good trade option there. But at the moment, it's mostly being driven by the dollar side of things. Same way that we're seeing euro dollar and the pound coming off as well, and dollar yen pushing up a touch.
Can you give a short brief on how a beginner can learn SMC and ITC?
ICT. Yeah.
I guess you mean ICT. Yes, my brain actually couldn't remember what it was. I was trying to combine the three letters into. Is it CIT? No, not CIT. TCI.
ICT, CIT,
I was like, ITC. What? Oh man. So just fun. There are loads and loads of people out there that will confess and profess to know the SMC way and the ICT way, including SMC himself and ICT himself. Some people make money from it. A lot of people don't. It has become a bit of a cult following with ICT, the guy, and it creates a lot of controversy and a lot of ill feeling amongst people, and creates a negative vibe, let's say. So my recommendation to you is if you want to go and look at it, there is tons and tons of stuff out there on YouTube. There are ICT traders out there that trade it and use it for their trading, and they provide content on YouTube. Don't go paying for it, whatever you do.
Yeah, don't pay.
But whatever you do learn, back test it. Go and open up a chart on TradingView or whatever trading platform or charting platform you want to use, and go and analyze it and go and see if you can see what they can see. All right, that's the best thing you can do. I'm not saying don't trade it. I'm not saying you should trade it. What I'm saying is if that's the thing that you want to go and learn, because lots and lots of people do, I'm not going to say don't do it. I'm not going to say you should do it. But what I'm saying is do your own due diligence and check if what you're being taught, or what you think you're being taught, that you can actually replicate it and mimic it and use it. If you can't, leave it, right? And don't buy into the marketing madness.
Yeah, don't get dragged in by people trying to ship the stuff. To be honest, like some of the things in there, okay, a lot of it is just kind of random noise, not gonna lie. Kind of how it works is like if you actually went and plot all of these things and all these apparent concepts and all this kind of stuff, you put it on a chart, it gives you 100,000 signals and lines and bits and gaps here and this, that, audible. Like you could get 800 bajillion signals from something, and then he also sort of teaches the thing from that, saying like, oh well, you just timed it wrong, or you this, or you that, and you gotta fail first to succeed. So it gives this, if you add all that together, it's like this perpetual hamster wheel of he can kind of say anything from any direction, and it seemingly seems logically valid because it's saying, oh no, but this, so that's why it didn't do that, and then you go there and it's like, oh no, but wait, this. And so look, understand that it has become a hot topic and blown up through social media and that kind of stuff. I would tell you to treat it much like a lot of the wild things you see in crypto, right? A lot of people are trying to build up reputations quickly over social media from this stuff. your best bet would be to go back to some older trading content or books, or try and, there's other things you can read, research papers from hedge funds or banks, from, Goldman. There's all sorts of this stuff out there. If you look through it on the internet, there's various forums where people have posted PDFs and research papers and all this kind of stuff. You do a much better service to yourself learning that stuff. It doesn't mean it's 100% nonsense. There are ways to trade the thing in some sense, but if you understand mathematically how this stuff works, you're kind of more being deluded a bit.
You're being brainwashed. You're being brainwashed to believe things that aren't necessarily true. This comment from Nassim, right? This is why I don't like ICT, because the way that he is as a person encourages this kind of commentary, right? The same with Henry's. There's nothing wrong with the comments that you guys are making, just to be clear, right? But the way that he is and the way that he acts and behaves is incredibly patronizing, and incredibly, I'm holier than thou. I created the algorithm, and the market follows what I tell it to follow, and all this madness. It's rubbish, right? It doesn't, and he didn't, right? And it's proven. So, that's where people become negative about ICT, because of how he positions himself and how he tries to make himself out to be some kind of savior to the markets and savior to the world, right? This all being said, there are plenty of $5ers traders who have become funded and got payouts following ICT concepts. So there is something to it. I don't know what it is. I've never looked into it, because the guy himself kind of puts me off it. But the fact of the matter is, there is something there that people are able to glean from, and they're able to try and get something that helps them to be profitable, help them get funded, etc., etc. So all I would say is go and do your own research, go and do your own back testing, and see if you can make it work for yourself. That's my advice. Because I've looked at, for example, like Rich, who's the performance coach of the 5ers, amazing trader, right? But when Rich talks about his structure and how he sees things, I just can't see it. I've never spoken to him about this, and I probably should, but when he talks about his chart structure and everything else, I just can't. His narrative that he sees, I don't see it. I see it differently. That doesn't mean that he's wrong. It doesn't mean that I'm wrong. It just means that his interpretation of the charts and his interpretation of how things move and how things play out, I don't understand it. It doesn't make sense to me. But what I see and how I structure it and what I've looked at is based on what I can understand. AV, the thing is that people say they're ICT traders because it's popular, and because it's some kind of kudos or whatever. So
yeah, this next point
they
that
feel
you
it
said
legitimizes
is
them.
The main part. A lot of people using the so-called concepts or something, it's more they've actually got the main part of what they're doing is just they're actually managing risk correctly. Because you could come up with something where, say, you can flip a coin 50-50 and call this a strategy, right? Okay, now if you actually end up winning 50% and you lose 50%, you come out flat. But if you're risking 1 to make 2, simply by tossing a coin in the air and going with that, you would be profitable. Now, can you call that a legitimate, like fully fleshed out, thought through strategy? No, you're kind of gamifying risk, which is in itself, to a degree, a strategy, because that is a large portion of the your total trading approach, right? Is managing risk. The trouble people have with that is sticking to it, and they, go back on their promises to themselves and that kind of thing, and they devoid from that. But so at the end of the day, focus on risk management more than anything. No matter what strategy you have or approach, or whether it's macro fundamental stuff, trading options, you're trading anything, the cornerstone for any strategy work is always risk. Managing risk. None of them can work without managing risk. So that is the main concept and core focus that you should have at all times.
This is what we're talking about, right? Maya's putting it perfectly, right? It's about your own strategy, doing your own back testing, and understanding what works for you, right? Nassim is making a perfectly valid point, right? ICT traders are actually profitable due to their own due diligence and understanding things. The concepts themselves aren't necessarily an edge, right? It's just a narrative, right? And then these counter arguments is why ICT is so controversial, because then people then start going backwards and forwards, arguing, oh, well, you don't like the man, rah, 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 rah. It's like, this is why it, you know, it's a negative drain on the industry, in my view, right? That's my personal opinion. You know?
Yeah, with what Jeremy said, like someone brought it up. That's why we're talking about it. If you came in a little bit later, Jeremy, you know, I can bring out a bunch of math with a stochastic jump diffusion, right? Whether, well, you know, probably most of you guys won't have any idea what that is, but it'll create a chart that will have sort of gaps and fair value gaps and these block orders and whatever levels, but it's complete just fabricated math put together, and it's going to appear as though all these things are coming out of it, but in reality, no, this is just how those numbers, when displayed graphically, what they produce. And then I can tell you exactly how much you're going to profit or not be able to profit from trading that piece per the number of inputs going into this chart. And that's where you get the jump component for. So it's not going to be tradable. Doesn't mean it's not tradable for a profit. It's not tradable for a profit in excess of the jump, per se. And so that's where his stuff falls apart. You know, those processes are exactly what banks and institutions and hedge funds use to actually map out the chain of possible probabilities of where they believe the market will go. And then they build the forward structures and their overall portfolio strategy based on these sets of probabilities, map them all out, and then assign like a percentage chance that they believe that this will happen. That will be recession or hard recession or no recession, etc., and the corresponding expected price move for that.
Statistically, a certain percentage of traders will pass an eval just flipping a coin.
Yeah, precisely.
It's a very fair point. Guys, it is time for us to bid you farewell before anyone complains and says, oh, Mike deleted that trade that he had on his account. But there it goes. There it is. There it's back again.
Hey, Jonathan.
I'm not ICT. So
okay, got brought up again.
it was a valid trade entry. It didn't work out. It's fine. We'll see how it plays out. We had this break. Ideally, I want to see us react from this area here, which it's doing right now. So yeah, it might be a nice sell opportunity. We'll see. But we have got the wonderful Deanna and the legendary Victor waiting in the background. Frankly, LJ and I are too sick to continue. So we're going to pass you over to those guys. Right after this, they'll be joining you. In the meantime, guys, trade safe. And we hope to see you in the AlphaBeta Lab sometime soon. Take care, guys. And thanks very much for joining us.
Hello, we are back with the wonderful Deanna and myself. I hope everyone is doing fine. What's up, everyone? Tell us in the chat. Deanna, how are you doing today?
I'm doing great, Victor. How are you? I hope you're healthy. It sounds like everybody's struggling to stay healthy right now.
Well, I'm as healthy as a fish, if that's an expression. Oh, tell us in the chat, everyone watching. This is a wonderful day. It's Monday, the beginning of the week. Let's start with some great energy because you got to be positive if you want to be successful in the market. There's no way you're gonna be profitable if you start with the wrong foot. Meaning, you got to start with good vibe, good energy, with positive mindset. Wouldn't you say, Deanna?
Absolutely. Great way to start the
Um,
week. A much more fun way to start the week as well.
it is. It is a fun way to start, and it's actually it's the only way to live your life, right? You gotta. We're here anyways. I mean, on this planet, we have decided to be traders. Let's make it fun. Let's enjoy it, even if it's not going. Even if you're not there yet. Most of you, if you're watching this, you're probably looking for that little edge or maybe that little skill. Maybe you're not into trading yet, but you think it is something you might like, right? You might not be there yet, but enjoy the process, right? The journey. It's not so much about the goal, although the goal is real and achievable, but it's very much so about the journey, about the growth process that you go through. We go through, everyone, as we learn a new skill as a trading. So I think it's the best way to do it is with a lot of positivism, and that's the only way I know to do it. Deanna, how was your weekend? I haven't asked you yet.
It was great. It was great. My kids are in their summer travel season, so I went to 5 games this weekend. It was a ton of fun. What about you?
Games.
Oh, sorry.
Games. Is that soccer, baseball, American football,
Good guesses. Lacrosse.
lacrosse?
My kids all play
Okay,
lacrosse.
nice,
Yeah,
nice.
super
I
fun.
wouldn't have guessed it.
Yeah,
Being
hard
honest,
one.
I wouldn't have guessed it. But thank you for not letting me guessing it. Try to guess it because I would have failed miserably at that.
You were on the right
Um,
track anyway. How was your weekend?
great. I had a I know this is important to me, and maybe it's not as important to everyone, although it should. Um, I had some wonderful, very good nights of sleep.
That's
And
very
I think
important.
I know it may sound so trivial. We all do it every day. But I mean, when was the last time? If this question goes to everyone watching us right now, when was the last time you had a wonderful weekend where you slept, you know, the right amount of hours, and you woken up like I don't know, like in paradise, like a new baby, refreshed with full of energy, and that's how I had. So that was. It may sound boring. People might say this high flying trader, talking about the highlights of his weekend being the good night rest he had. But you gotta enjoy the small things in life, and
That's
that's one of them, right? Having a good night, or having making perhaps a new personal record on your running or whatever sports you're. Those are little things, but very important internally because they tell something about you. For example, the rest is I'm focusing on my health. I want to be a good trader. I want to have a good health. If you want to focus, it's going to be very difficult if you're not, you haven't mastered, your sleeping hygiene, right? If it that's, I mean, you talk to any high performance athlete, they're gonna tell you the work is not only done on the field, it's done in the kitchen, it's done in bed when you're going, you're getting enough sleep, and good quality of sleep, right? It may sound very trivial, very mundane, but that's how great performances are, created. An athletic, or this is not athletic, of course, but we do compare ourselves with athletic performance, meaning, we put everything, making sure that we can able to perform that. And trading at high level is exactly that.
That's right. Even LeBron James, that's one of his secrets to success. He's super rigid about his sleep schedule. how much he sleeps, and he takes a daily nap as well. And he has, been super rigid about that for years and years. It's funny because it's just a basic thing that we all do, but we don't always value sleep, especially in today's age. We don't really value it because we have, the daylight goes away and we still have lights and screens and all kinds of things to do. So it's easy to overlook that, but absolutely that's important. I'm glad
Alexander,
you were able to do that this weekend.
I beg your pardon?
I'm glad you were able to get rest that felt rejuvenating and really, made you feel accomplished too.
Yeah, I've been working, on many things, not only for trading, and yes, it is part of my trading plan in the sense that I need to be well rested. I need to be in focus, on sharp, not to, be impressed by whatever happens in the market, right? Be having a level mindset. And it starts, as I said, it starts with the small things, the smaller things that we might not think about readily when we think about, things you need to do to become a great trader. But I'm focusing on optimizing everything in my path. I want to be, and that pursuit never ends. I want to be the best version of myself as a trader, as a person. And there's no way you can get there if you're sloppy on other departments of your life, meaning your health, your physical health, your mental health. And, sleep is a big part of it, even though it is something it's not something new. Everyone does it. We've been doing it for the whole our lives. But still, it's not just about going to bed. I'm not going to be talking all day. You might be wondering, people watching us, we're not going to be talking about sleeping the whole day. This is a trading channel, but it is important. That's what I want to emphasize. If you want to be a good trader, you got to master as well all the other aspects, as well as, for example, emotional health, right? Your emotional balance. It's we all have emotions, don't we all? We all express them. We all interact. We are empathetic, or more or less so. But if you are unable to, have a good grip of your own emotion, knowing yourself and having that reflective skill to see when you're deviating, when you're too emotional and not being able to concentrate well, it's going to hamper your trading, right? It will. We all know that, how important keeping your emotions in tap are. We're not robots. We all have emotions. But the trick is, how do I navigate the day, the trading day, without my emotions in the way, right? That's basically it. Because you're never gonna stop feeling the feeling when you had a loss or a win or missed a trade. It's not gonna happen. You're not gonna not stop. You're not stopping feeling those emotions. It's the skill of placing them in the right perspective and knowing when to act upon them and when not. What are they telling you? And for that, you need a lot of knowing yourself and things that you get with experience. But some people, they get coaching for it, right, Deanna?
Yeah, absolutely. I mean, I personally haven't met anybody that gets coaching on sleep specifically, but absolutely on mindset and all kinds of other things. Even, you had mentioned before sports, and I think sports are interesting because we think of them as highly physical, but there's a huge mental element that goes into it as well. So it's more than just the physical element. It's both. I think we have a tendency to kind of compartmentalize and not think that things are related. But we are more holistic creatures in general. So
We
absolutely.
are. I mean, we absolutely are. You can't just think of a person in just one perspective, on one aspect of their lives. They're one person, meaning the other aspects or the other sections of their life, they interact with each other for good or for worse. Coming to the market, Deanna, what are you looking at for our viewers? What does Dr. Cole think this Monday morning? Where will be the opportunities in the equities where you have your looks, your eyes, your vision on, as well as gold?
Yeah, so far looking at looking at the S&P this morning, we're kind of in a funny spot because price has just moved so much higher.
Before you continue, do you have your screen perhaps so where our viewers could take a look at what you're referring to so they can
Yeah.
have some visuals? In the meantime, I have the S&P chart on. Can I show your chart?
Yep, absolutely. So looking at the S&P to start with, we've had this kind of basing action that happened last week. We can get this off here. Price had moved up so much after this big, so this is the daily chart of the S&P. We've had this huge monster move up, started to kind of struggle to progress beyond the all-time high, and then a massive breakdown. Once price broke down from there, started to make its way up, it was a little messy here, pushed up higher, and then price has just been on an absolute tear for weeks now, including a big gap here and a big gap here. So last week was more of a consolidation week. Price didn't, it was, it moved a lot, but it didn't progress further. So here's where we started the week on, last week was a short week. So remember Monday was Memorial Day. So Monday and Tuesday price action were both included in this Tuesday daily candle. But, price pushed up higher and then kind of, put in some candles that were like indecisive candles, and really price didn't advance too far from the high on Tuesday before it came right back down. It just barely wicked above this prior high, and it's just kind of, consolidating. So this is NFP week. That could be sort of a catalyst that could take us higher, or at least bring a little more volatility into the market so that we can see a little bit more progression. So I'll be watching the S&P today to see if we can get, maybe a pullback that would allow me to get in at a little better price. Here's the NASDAQ, kind of similar. I've got the gaps marked out here. Pretty similar price action. And I didn't mention this on the NASDAQ, but so far price action has been contained inside Friday's price action. So the high and the low of price so far today is inside what we saw on Friday. So really gold has been the more interesting asset to look at. So yesterday at the open, price had this big gap up, a nice little pullback, and then absolutely blasted higher. So in my opinion, I feel like gold last week was a little bit trickier to trade. If you see it on the daily chart, you can kind of see why. It kind of did this like slow, almost like a flagging action. Like it really didn't, oops, that's not going to be able to see that. Let's put it a different color. And gold is easiest to trade when it just trends, right? When it just moves, and it does that a lot. So once it started this downward movement, we had this little update, but then price kind of moved. And so those are the times that are easiest to trade gold. So last night, for example, I wasn't trading, but that would have been a great time to try and catch a move in gold, and it just keeps moving higher. So right now, to me, gold is the most interesting. However, this is the daily chart. Price is coming up on this swing high. So that makes it a little bit tricky to get in because, you might be a little bit late to the party, or we might go past this swing high and continue higher. So just kind of need to wait and see what gold is going to do here. What about you, Victor? What are you looking at?
Yes, that's Well, what we have in front of us is a this is very typical of the first week of every month, right? The first Friday of every month there's NFP, and everybody's eyes is on that NFP. But the days before NFP can be high volatility as well, because we have on Tuesday we have the JOLTS opening. We have Wednesday the NFP, the ADP non-farm employment range change. It may not be as explosive, but sometimes we do get some nice movement out of those news as well, because they are precursor to, they give a little preview, a sneak preview into what could be NFP. We also have the Bank of Canada setting their rate, the interest rate, which is obviously very important for that a pair or that currency. And on Thursday, we have the interest rate of the euro. Typically, it's not a huge deal, but it's still interest rate, right? They're doing a great job most of the time, telling us in advance, without surprising us. Telling us in advance what they're planning on doing, and they're very good at this, avoiding any surprises. So typically there isn't like huge gaps, but it can happen if those are the moments. It's a lot of opportunity, but as well as a lot of risk. If any time, they didn't do a good job in telling us or letting us know, managing our expectation, or the markets, not ours specifically, but the markets, of course, then with these moments you can have a lot of volatility. So I'm looking at this, and I'm thinking already, okay, so this week we could have a lot of movements. And when you position that as the first week, higher volatility than usual, daily ranges will be expanding and so forth. And we look at the to start with gold right away. What I see is on the higher time frame is we are coming from a bullish order block that was created on the weekly, and last week we retested very nicely. I am aware that there is a, it's not all clear, all blue skies, because there is a bearish structure we are in. But then let's not forget that the market has been going very, very bullish. So, this shouldn't be an issue long term. It could be for the couple of it could be for this week and perhaps even next week, create some selling pressure. But what we're seeing right now from the buy side, we have enough reason to buy into this bullish trend or run, right? We have a bullish order block that was created. We retested last week, leaving that wick, nicely retesting it, and we are currently above the high of last week, right? So that, without even going to details what's happening lower time frame, this tells us that buyers have the upper hand, and we don't know what this week will likely come to bring to us. But this looks bullish, very, very nicely bullish. We go to the daily order block, we go daily time frame, and that's no, there's nothing wrong, nothing bearish about this, right? We have that coming back, that retest we saw on the weekly. It creates a bullish order block, retest this on the daily as well. So you have that alignment, and it shoots up. This opens the door for higher prices. I don't know, we never know, but I'm not sure if it's going to be closing the week above this level, but I'm not ruling it out, because we're all back, all bullish on gold again. Let's see how this continues. I have to say though that they are, there's a little risk for gold, because gold has many reasons why, it has many drivers. One of them is, of course, the conflict in Ukraine and Russia. So there is a little risk there, that if there is an unexpected, really good news, some kind of ceasefire, perhaps some kind of a better than expected result of those meetings they're planning on holding, that you could see that in gold. And that's something that's been here with us for some time. I don't think it's a huge long-term issue, because I think it's going to take a long time before things really get better. But it could, on short term, within a day or a couple of days, it could affect the sentiment a lot. So I'm looking very bullishly technically. If we go to the H4 to get some more ideas, you can see how the bearish order block on the quasi worked very nicely in pushing price lower. Eventually it continued higher. That's something I left that order block just to show that how price, it's very easy if you just start from the higher time frames and trade from the H4 for your lower time frames structures. The same thing, a lot of times we say this, the first retest is the most powerful one. And this is, you don't have to look too far in the past to see these structures, but as you can see, there was an order block before we came into it. That was the first retest. You could argue that was the second retest, and the third one it broke. On the flip side, when we created this order block, just one retest moved away. On the second retest, no longer holds, right? So that's the importance of knowing, the maturity of the structures, and that's always why I stress on the freshness of the order blocks. It's a real thing if you catch these structures as they are fresh, and their probabilities vary greatly once they have already been retested. I steer clear of them once they are already retested once. So that's gold. I'm gonna look at the euro dollar for those who are with us today. Let's see. All right, so let's see for the euro. Let's do a top-down analysis for the king of the forex pairs, the euro dollar, the one with the most volume, and it's for a reason. The best spreads, the highest volume, highest liquidity, depth in the order books. So it is that's the euro dollar. So on the monthly time frame, very quickly, there isn't any structure, any actionable structures that we could use this time frame. We clearly see that we are breaking. We have in the past, this is the monthly, we have broken that swing high. It opens the door for the next structure. We are currently at one of the three structures that could stop price. The current one doesn't seem to be, price doesn't seem to be impressed with that. And we're currently testing. We already went above it the previous month's high. It looks like we are, getting ready for higher prices. Today has been a outside, a wider than average range. And we'll take a look at that on the daily. But it's important to know that this is the first day of the month, and we're already starting with a lot of great moves in EU. On the weekly time frame, very similar to, not surprisingly, very similar to gold, because of course it's the weakness in dollar that is partly what is driving the market on this pair as well. We have a bullish order block that wasn't retested. It didn't get to test it completely, but before even reaching that order block, we are already above and showing, not printing yet, showing another bullish structure that we might be creating this week. So let's come in. There isn't anything actionable other than that if price comes back into this order block, you want to be looking for that long on the daily time frame and a lower for your alignments. Let's do on the daily. So we're coming back to the to the first structure we did. Let me take this out so we can show this to our viewers. Remember to let us know what you think of our our show. If you think this is helping you, if you like that we're breaking down the market, maybe you do agree, maybe you don't. It doesn't matter. But if you think we're doing a great job, hit the like button, subscribe to our channel if you haven't done so. Show us your appreciation for the content we're bringing to you. So all right, so let's continue with the daily. What we have is we didn't create, right? Always when we have a swing high like this, I'm looking to see if we have broken any structures. And if we go back, this being the head, the possible head of a quasi, we go back and where's the neckline? And the only neckline that I see is this line here, this level. And as you can see, price never even reached it, far from it. So it means that, if we're not creating not even the illusion or the intention of a possible reversal, what does that tell us? Where does that leave us? It leaves us that the market is not even trying to reverse on this time frame, meaning we should be looking for higher prices, because that's the way of least resistance. So that, with that in mind, very simple rationale, but very powerful, because it tells you, stop looking for possible shorts necessarily. Trade what the chart is telling us, right? Trade the price action, and price action is telling us that on the market structure, from a zoomed out a little bit, it's not breaking down at all. Not only that, it's creating, we saw on the weekly time frame, bullish structure, and well, it's showing currently a bullish order block. Hasn't been closed yet, so we shouldn't trust that. But if you go to the lower time frames, you can see that the daily time frames as well, we created one, another one, and another one here. All of them held, even though they were squeezed for some time. They did hold. This one as well, tapped and moving away, right? We are in that bullish order flow where bullish structures are being created and successfully retested, meaning you want to be putting yourself in that direction. Now, knowing the direction is one thing, but you still have to pinpoint or identify the areas that make sense for us to get in, right? And on the daily time frame, we're currently, the move has already happened. I'm sorry to say, for at least for today, because if you look at let's measure what the daily range has been so far. It's done 90 pips on EU, and the ATR is currently at let's look at this. The ATR is 94. What does that tell us, right? It can exceed and go on to do maybe 150 today, but if we look at the news, do we have something that could push the market necessarily? Well, we have as ISM, the manufacturing PMI, probably gonna move the market somewhat, but I don't expect any fireworks. So I don't know, maybe it will, but most likely we did already what right now what was most of, actually a great part of what we can expect of this day to happen. Maybe we go another 15 pips, maybe 20 pips, but I think it's not a high likelihood. So I think the move of today already happened. So there isn't anything at least I can't offer any opportunities. If anything, I would be looking for a short, not because I'm bearish on the market, but because I think the market has done already its move, and we are currently in a bearish order block that is being retested. I don't think that structure is going to hold very long, but it's likely to have some kind of reaction from the market. And what I mean by that is, it looks quite very, very weak in terms of the order blocks on the daily time frame. If you look at the swing high, we did close above it, meaning the market is clearly showing that it has the intention, and it's likely to continue, even if it doesn't do it right away, continue to move higher. But we are in terms of the ATR, we have kind of we have done already the move of the day. So I think we could see some selling pressure coming in. I don't see any reasons yet. We do have a quasi entry order block on the H4. But I need to see some structures on the lower time frames as well, and I don't see them, at least not on the H4. We can take a look very quickly to see if we have anything that tells us that sellers are coming back to the market. That's too weak to me. That's just an H1. I want to see the H4 as well having trouble going higher. The H2, it's too early to say anything. It could just as easily continue to go higher. So I would just wait and not be too, I wouldn't jump the gun and think, we topped out If you look at then as well on in terms of the acceleration, I don't see the deceleration yet. Yes, we're going sideways for a couple of hours now, but that's it still looks quite strong. I mean, you do have a bearish H1 order block, but that's too little to think we're gonna go south anytime soon. So I might be looking when we get a little bit extended, perhaps maybe another 20 pips and maybe another 25 pips. I will start looking for that topish reversal pattern, a little quasi on the H1, perhaps on the 15 minutes to get my reverse, my fade from the day of the day, and then probably not hold it for very long because the market is very bullish, right? You want to be going with that impulsive move, that momentum, and not against it. Do we have Powell speaking? Someone in the chat is saying that, Deanna, do you know when is? Oh yes, I see it is in about. It is. What is that?
It's 1 p.m. Eastern time. So 4.5, just under 4.5 hours.
Yeah, 4.5 hours. Powell speaking. So who knows? Maybe the market will not do much until then, in a waiting stance. We'll have to check that. But in EU, in any case, the move was already sadly to say, but it already happened. So either you caught it, or you should just wait for the next new wave to come in to get in. Because going long right here is, to me, there's more risk to it, at least for today, than benefits. What do you say?
Yeah. I today's Monday, so like you never know what, especially on a NFP week, it can always be, sometimes it can surprise us. Obviously the move overnight, at least in gold, was pretty massive, but the indices really haven't done much. So maybe that's what they're waiting for.
Awesome. So let's ask the chat if they have any suggestions, any asset they want us to look at. Maybe you have a special forex pair or any of those 28 they're majors. I mean, major in the sense that they're not exotic pairs you want us to look at. Maybe some yen pairs. Just let us know in the chat. We are all here. We are at your service. We are here to break down the market, show you what we are looking at if you were to trade that specific trade or pair, I should say. On EU, as I said, if I were to go ahead, Deanna.
It looks like Lone Wolf is asking about the DAX. And okay. Good morning, Lone Wolf. I don't know if this is the Lone Wolf that I know, but welcome if it is. I don't trade the DAX. Victor, do you trade the DAX?
No, I don't. I don't trade. Yes.
I don't trade the DAX. So I'm really that's, I don't know if you would analyze the DAX, but I would not feel worthy of being able to analyze the DAX because I'm not familiar with it.
Yeah, that's fine. I don't trade the DAX, but it doesn't change anything in terms of the CFDs, right? If we look at, I'm looking for, let me get the German, I think it's German, what is it? Maybe 30 or 40, I'm not sure.
I think it's usually 40. Oh yeah, he said 40, German 40.
Okay. Let me see if
by the way, while you're looking that up, gold is still making a push towards, push higher, coming up close to the daily swing high. So there was a daily swing high just above. So it's working on pushing up there and isn't quite been able to hit that level yet, but we'll see what happens.
You mean the swing on gold? That swing high
on the daily.
You think it's on the day? Oh yes, on the daily time frame where it's clearly going for. It's likely to at least test it for some time. Let me check the ATR for gold. I always like to look at the ATR. It's 65. Currently, it traveled, and it's 66. The ATR is right. That tells you already that we probably, unless Powell's speech or some other event pushes us into more volatility, we already did most of the range of today. So it can fade back. It can continue a little bit more, but I wouldn't expect too much from it. But who knows? Gold is gold. So after that breakup, maybe it will surprise us. Going back to German 30, let's look at that. I don't trade that. I'll honest. I've been a long time. I haven't had a trade on German on the DAX. However, price action, there are nuances between indices, in forex, commodities, precious metals, energy assets. There are, of course, nuances, and you need to know them. Need to know how the behavior of the asset is before you trade them. But price action, it's the same story, right? It's the same language, no matter what asset we look at. So I will gladly look into that. Let's look on the higher time frames. This is the we did create a very large monthly order block right there. So anytime we come back into that, we could start looking for structures on the lower time frames to create or to trade from. And we can see that where it reacted, it didn't break any structure, right? Retraces are very common, right? In the forex market, we have sideways movement where it expands and it holds, trend, but on the greater scale, it doesn't really go, in one direction only. Equities, on the other hand, has a positive drift. So on longer term, the bigger you zoom out, the more you'll see that, we all know this, that it will go up and up and up, right? And it's by the number of the layers of defense that it breaks each time it retraces, that is an indication of how bullish the market is, right? If it needs 2 layers, is clearly not as bullish as if it only needs 1 layer of defense. What I mean that is that each structure we create is a stepping stone, if you will, of price to come back. Even if it's continue to go higher, it does this, right, all the time. That's exactly what I trade, tracing back to that structure and a move away, right? And we can see that the last time the DAX did that, it didn't break any structures in the process, right? So that's one thing that I like to see on the higher time frame. So we're firmly bullish on this from that perspective or that time frame. The weekly time frame, we have had a actually much more than the US equities now that we see them, because we're making higher swing high. We broke that from before, unlike the equities on S&P, for example. So we are above this level, right? That swing high. Let's look at on the weekly time frame. Let me get that in. All right, so we are I think this is the probably the opportunity and the task for the market to tell us what's to come, because this looks like we had an impulsive move, right? And some deceleration, right? The bodies of the candles are getting smaller. And the question is this a consolidation before a continuation, or are we going to see some kind of retracement into some demand zones? We don't know that in advance, right? From the looks of it, looks like prices wants to keep on continue because it creates bullish structures, and it is retesting it from above, which sounds very bullish. And as long as it keeps doing that, we should obviously be long this pair. But this is the area where the market will tell us if it holds or not, right? By the degree it holds this structure, it tells us what it wants to do in the near future, in the next couple of bars after that structure is either retested successfully or invalidated. So far, the monthly looked already bullish. The weekly is holding up, even though it had its kind of at its all-time high. It is relatively still creating those bullish structures on the daily. Let's look at a structure. Do we have any the first things we can look at, if we consider this to be a top, where would the break of the structure be, right? And that would be, I would say this is obviously the break that we, the line in the sand, the neckline, before we start thinking price is, gonna go much lower. So far, as long as this isn't broken and it doesn't look at all that price even needs to retest that in order to continue higher, that tells me that buyers are firmly in control and are likely to continue that. There is, however, a inside bar here on the daily time frame, a bearish one. So that could tell us that, and actually the fact that we're showing a bearish order block, we haven't printed it yet, but showing it means that we're likely to have some deeper retrace after this, next couple of candles. How far deep is obviously, we don't have a crystal ball, but it looks like the market is ripe for at least for some push lower into the weekly demand zone. Let's see on the weekly, on the H4, where would you be, since the higher time frames are still firmly bullish, and we have the weekly structure holding us up so far. You could ask yourself, okay, so where would I be interested in buying this, right? Because looking at the weekly, I want to be a buyer, right? That's the path of least resistance, right? If it gets below this, I will change my stance. But so far, so long as it holds this structure, I'm gonna want to be a buyer. But where do I want to be a buyer? What area? And if we look at the daily, so we have this is the broader demand zone. We go to in H4. There isn't a lot to work with, I'll be honest, but we do have a little. Actually, we don't. There is a little retracement, a little reversal, bullish reversal here, but I don't see it, to be fair. This one has been retested already, so this could be because of lack of other structures. I don't like this because I would consider this movement to be the head, right? If we're considering a inverse quasi, meaning a bullish reversal, I would consider this to be the left shoulder, and it has enough a downward trend to be considered one, so it's a valid one. And I don't like the fact that we need to be looking to the left of it to get some structure. Typically, those structures are very weak, but we don't have anything else. So in that situation where we have a lack for better structure, we could use this structure. The thing that I like about it as well, it is at that broken level, right? That swing high that we broke, retested. Not once, we broke out of it, retested once, a second time, even a third time. I don't like that fact that it's been retesting it so long. I mean, let's look at the daily to see how much of a retest we can see on the daily. Right, it's this level. We have an immediate retest, which doesn't really count as one. On this time frame, we have one retest, so a second one on the daily isn't too bad. I would consider that to be a still strong area where we could bounce from. And since we have this order block here laying at a very, with confluence with that broken level, I would be interested in price to see how price reacts when it gets to this level. If it gets there, I think that's so it's not something for today. I would be looking for price to get in here, and perhaps after we have the reversal, get in, put your stop below that, and target at least this high or some structure we have left in the process. Maybe even this order block that was retested before, right? That's the most conservative area that I would be looking to. I think this is how I would approach the DAX. I hope that helps you, Lone Wolf. Was it Lone Wolf? All right.
Yes, sorry, it was. I was muted. It was a little while back, but yes, it was Lone Wolf. If you
okay,
there it is.
Yes, that's how I would I would approach this. This is not something for today. I understand that that's something for maybe in a couple of days, depending on how fast the market starts moving. But if the move of the day, or my expectation for this day, maybe we can look. Actually, someone asked, how do we use the ATR? So let's go to that, because I think I can That's exactly what I'm going to be talking about the next couple of few seconds. Let's not make it too long. But what we have here, the ATR is a very simple indicator, very simple in concept, but also very simple to use, but yet very, very powerful. The indicator is a measure, right? It's the average true range, right? The name says it all. It's an average of the range of the last couple of bars, right? So if you have it on the daily, which is one of the most powerful application of that indicator, and if you look, just click indicator and ATR, you will find it right there. It's nothing too easy to find. You find it on your MT5 as well. Most platform have them by default. And if I double click it, I have it on the, typically it'll be on the lower panel of your chart. And as you hover over the candles, and it depends on how many candles back you want to look back, right? So default, I think, is 14, but you can have it at 20, which represent 1 month. In the case of a daily time frame at 20, you can have it at 5, which represent 1 week, right? It's up to you how sensitive you want to have it, depending on what you want to use it for. I would say, 14 is a great number, 10 as well. Even 5 is good because it's very sensitive to recent price action, right? If price starts suddenly to expand, the 5 will pick it up earlier, obviously, than maybe the 10 or the 20. So maybe the 5 is a great number, maybe 10. It's up to you. You have to experiment a little bit with it to see how it fits you better. But what it's actually telling us is, the average range of the last couple of days, X number of days, right? If you use it on the daily. And that's a powerful thing because the market, even though not every day is the same, right? Some days we have expansion beyond what is average, and that is normal. And sometimes we don't have that. Sometimes it stays 70% of what it normally does, or on average for the last couple of candles. However, it's a great indication of what you can expect for any day looking into the future. And the range doesn't tell you which direction it's going to do, right? It could be a big bullish candle or a big red candle, right? A bearish candle, but it still does tell you quite nicely what kind of range you can expect. You got to take it with a little bit of a pinch of salt, because it's not too precise. But if you have a reason already, if you already have a reason that the market is going to go higher or lower, and you combine that with the ATR, the expected move of the day, that combination can be very powerful. And I'll show you exactly what I mean. Cherry, nice name, by the way. Thank you for that question. What we have here is on the daily time frame, we have let's measure it. Right, we actually, before we go we use the ATR. Let me take this away. Before we use the ATR, the fact that we have a bearish outside bar on the daily, which was created by these two candles, this one and that one, and we had a immediate retest that ended up Friday with a wick, not a huge wick, but still a wick. Which is, I believe, more than 50% of the whole day's candle, making it actually possibly a pin bar. That tells us that the structure was created, bearish structure, and it was retested successfully. And what do we see? Today's bar is being, obviously, clearly bearish, meaning that the sellers have understood the idea, the market participant understood the sign, the signal. Created bearish structure, retested, we go the other direction. Of course, we do have this bullish structure below us, so it's not going to last for very long because that's a daily and this is a weekly. Weekly are stronger, but you can understand the direction that at least today we're likely to go, and that's the point. So we have the most likely direction, and let's measure today's range, 262, right? And let's look at the ATR. What is the ATR telling us? ATR telling us 367. What does that tell us? Anyone in the chat, let us know how much attention you've been paying. Cherry says, okay, so there's go ahead.
I just wanted to throw my chart up there for a second so I can show a
Sure.
tool that I use that might be helpful. So this is a ATR tool. It's called Daily ATR Levels and Expected Move Levels. And what that does is just puts the daily open. It calculates the daily open for you, and then puts a percentage of the ATR, so you can kind of get a sense of where you are for the day, and includes a calculated expected move based on the volatility of the asset. So you can adjust it how you want. If here's typically, like Victor said, typically 14 is what's used for ATR, but you can adjust it lower if you want. Here I have it at 7, and then you can kind of adapt it to whatever your needs are. So if you just look under the indicator tab, that's a free tab that you can plot right on your chart. And it's nice to know, for example, like Victor was saying, gold has already made a huge move today, and maybe it's a trend day where it's just going to blast higher all day long. Maybe not. But you can easily see on here, okay, this is where price opened, and this is how it went through the various, levels, and see what that looks like, so you can get a sense of where you are. And likewise, this is the S&P on the left and the NASDAQ on the right, upper right. Price hasn't done anything. So we're very close to the open within the first 25% of the ATR. So you can make some conclusions from that as well. So that might be a tool that's helpful. I'm not sure who the author of it is, but if you search under here, ATR, here we go. ATR levels, small tilt. So this is the one you're looking for if that's something that's helpful.
Hi, Vinicius. How are you doing today? Thanks for greeting us. Thank you for joining our stream. We're just talking about the ATR. We had some questions in. So we are going to, Deanna is showing a good indicator that you have been using for some time already, right? Using the ATR and some expected move on the chart, where you're using it, and you see how the market reacts to these levels, right?
That's right. I don't look at the expected move as much. I typically pay attention to the ATR levels, and oftentimes you'll find that price stays within the 25%. So for example, this is for the S&P. So on the S&P, price is very likely most days to hit either the negative or the positive. As you get further out, your probability of hitting those levels is lower. So the probability that price is going to, it can happen, but the probability that price is going to make it all the way to the 100% is not as probable. And so you can, plan around that and just get an idea of where you are, how far price has already worked for the day, and what might be reasonable to expect. If you can use it for stop placement too. So if you see that price is starting to really move higher, let's say on the S&P, you might use one of these levels for your stop somehow. So it's a really nice visual way to kind of keep you aware of where you are in the chart. So you're not getting lost in, the wiggles and the jiggles. You can see where you are in the chart a little bit easier. And if your expectation for price is within, what's reasonable based on the ATR, or maybe if your take profit, for example, is, way up here for the day, okay, well, that's not a very probable scenario because it's way beyond the daily ATR. So I think it's pretty helpful to kind of help you understand where you are in the price action. And also, if you're looking for an easy way to identify bias, if you are above the daily open, for example, on gold here, you might want to conclude that the bias is, at least so far, has been up for the day. That doesn't mean that price won't turn around and go lower from here, but so far the bias has been to the upside. Likewise, on the S&P and the NASDAQ, we're still before the open today, so this is just preliminary, but so far there really hasn't been a strong lean either direction. We came down and Price did tap the minus 50% ATR, but right at the moment, price is right back at the daily open. So I think it's a great tool to use.
It is. It's absolutely, actually, I don't typically use any indicator on my chart. I like to pride myself that my charts are, indicator free or indicator naked, and ATR is the only indicator that I use in a day-to-day in my part of my trade plan. I do have EMAs on my charts that I tend to, not every chart, but I do have them, on typically, but I don't use them. They're just to, give me an idea. Okay, are we momentum? Are we having momentum moves, or are we just ranging? And EMAs are a great, quick way to get a read of the market. But the ATR, I think it's very, very powerful. Even if it's not precise, you don't know. It doesn't tell you what's going to happen in the future, because no indicator can tell you that. But it comes very close in telling you, what kind of day. And the more information you have, you can combine that information of the ATR, the expected move of the day, combine it with price action, combine it with momentum. You can get yourself some pretty good probabilities in your favor. I'll switch back for a little while to my chart.
And I'm going to pop off, Victor. It's good to see everybody. Thank you so much. And exactly what Born in 2944 said. Everyone has their own way. I think that's exactly it. Indicators or no indicators, you just have to find what works for you. And there's no right or wrong way to do it. If you can find your edge, however you find that is the way you want to stick with. So absolutely. All right, everyone. Thank you so much. Thank you, Victor. Have a great rest of your day. And I will see you next time.
Lovely to be in your company, Deanna, again, and I hope to see you again very soon.
Take care. Thank you.
Bye-bye. All right, so yes, we will. We have Josh in the background. Josh, let me know whenever you're ready to join us with a thumbs up, or however you want to tell us. In the meantime, I will finish the explanation I had on the ATR. And Born in 2944, that is so true. There is no one way of trading profitably. My way is just one in thousands, if not millions, of ways to trade, right? It's up to everyone to find your own personal, way or trade plan, one that resonates with your personality, with the available time you have, with your risk appetite, and all those good things you need to know about yourself and the way you are before you choose your style. And it's, there's that discussion or debate a lot of the times, right? Are indicators necessary? Are they profitable? They're just tools like anything else to help you. And it's about finding the right tools for you. It's not the tool that's going to make you're profitable, but they can help you if you build a good system and you know what you're doing with these tools, right? It's you got to have the right tool for the job. So if you know what these tools are able to give you or tell you, you can combine them with different things in the market, not only indicators but price action. I like to look at price action and try to only look price action, but that's not the only way. What we have as well, just me finish here. I have let's see, we have the let me finish the ATR before we go for our before we continue. So what I was saying was that the ATR was telling us that the daily expected range, or the average, currently is at 367, and today the market has done 262, meaning on average we can expect another 100 points. So if you know that we are still likely to get near another 100 in either direction, either near a higher high, today's high, 100%, 100 points above or below the current low, and you look at that daily momentum or that daily price action, you can understand, even though I haven't gone to the lower time frame, you can understand that the likely place of that direction to be, that 100 pips that you could still expect from the range, the likely place is going to be to the downward side. So that's something I want to understand. I want to explain. And so if you combine that with lower time frame structures, you can then start to think, okay, if we're going to have this is the today's low, and we mark the, let me mark the another 100 points, that gives you the expected move of today, right? The expected low, which is right here, right? 66 more or less. So that's how one of the very powerful ways to use the ATR. We have Josh in the background. Josh is ready. Let's bring the man himself. Josh is with us. That's as soon as I find
hello
right
everyone.
button. How are you
We're back
doing,
again.
Josh, on this beautiful day? How are you doing today?
Very well, very well. It's a new month, new opportunities. I'm looking forward to it.
Perfect. We're happy to have you here. Everyone in the chat as well. We're excited. We have Louise saying hello, Harvesh as well. They have been waiting for a scalper for many, many weeks. And lo and behold, we have Josh, a scalper, and he is going to show us what a scalper would be looking at today on the charts, and perhaps even some move, maybe we can please our audience as well with some maybe a trade or two. What do you say?
Yeah, let's see what we get. We've got a very news intense week this week, especially Monday to Thursday, which are the days where we're trading. So yeah, it's going to be interesting. I think that we can expect some trades, I'm sure. But as always, it's about maintaining my executions at a high level, ensuring that I'm confident in what I'm looking for. And if that appears on the stream, then I will be pleased to explain the trades and show everyone what that looks like as a scalper.
Awesome. So I was explaining the ATR, and actually I was just the last sentences that I wanted to show was that, so that this is the low of the day on the DAX, for example, but it can be any asset. And given we can still expect another, give or take, another 100 pips, that would be the low. And you can mark these on the chart in advance, right? And you adjust this during the day, and that gives you a nice idea what you can still expect. And as the day progresses, you can get a fair good read if that's still likely to happen or not, reaching that level. And I use this every day on my charts to keep my targets reasonable, not only at the open, but as the day progresses, because, you know, not every day it goes to 100. Sometimes it falls short. Sometimes, obviously, because it's an average, it goes through it, meaning you have outside ranges or ranges that are bigger, stretched, more extended compared to earlier previous, meaning, sessions, meaning 120, 130, or sometimes even 200%, right? Those are rare, but they do happen sometimes. But this is a great way to know where the higher low of the day is likely to be, and to manage your expectation as the day progresses as well. All right, so let's look at the markets. Josh, what are you looking today? I'm sure everyone who is a wanting to be a scalper, or maybe is a scalper, they want to know what assets are you looking at, and what is it that you're what are you looking for? What is it that you're eyeing today?
Okay, so let me just share my screen with everyone quickly. Share my NASDAQ chart. Let me know when I'm on.
You are now. Yes.
Okay, so we'll get rid of that. It's not relevant. Okay, so we're in an interesting situation at the moment. Obviously, what I showed on the stream last week, Wednesday and Thursday, which were my first two streams, we saw a sort of repetitive pattern of a move to the upside and potential areas that might act as support. So my thought process to that was fairly similar on both days. What we're seeing here is we've seen a big move obviously happen. Obviously, this is looking at NASDAQ. This is the 4-hour chart, 5-minute chart. The 5-minute chart is where I'm executing, but for analysis's sake, let's look at the 4-hour chart for those who don't already know what I'm looking for. To be honest with you, a key area is that I'm looking to see this sort of 24s get run. To be honest, I feel like we've been in this little range for a while, and yeah, we'll see. I've not got a definite answer yet as to what I'm looking for, because what I'm seeing here is very dependent on if we're going to run these lows. I don't see us pushing higher first. I'd like to see a move down. But yeah, we're sat in an interesting position here. If I'm looking at the lower time frames, I'm looking for a run of these lows or a break of the highs, because we're sat in this sort of range here. It's the first day of the month. Usually I approach the first day of the month quite cautiously. I don't know whether it's just more of a psychological thing than anything, but I do have my reservations on the first day of the month because I want to just see how the market plays out. We've also got news. I don't know how much everyone has researched the news already, but we have news at 2:45 BST, so 15 minutes into US Open, and then half an hour into US Open. So we have two pretty significant news releases. We've got manufacturing PMI and whatever at 2:45.3, and then also we've got Powell speaking at 6 p.m. BST, so 5 p.m. GMT. So we've got quite a news intensive day. So I'm playing it sort of quite cautiously just to make sure that I'm not getting caught up in any moves. And sometimes the NASDAQ is waiting for those news releases. So for me, I'm not seeing a huge deal right now. I think that market open is going to be interesting to see what kind of volatility we get. But yeah, a run of this wick here from Friday at 4 p.m. is interesting. It looks like we've had some support here at sort of the hundreds level. So subject to volatility, I'd like to see a run of the lows, but I'm not getting a huge amount from this other than, yeah, waiting for these key levels to get reached.
Okay, so you're looking at, just for our reviewers to understand, what is it that you're like, what is the question you ask yourself? You open your chart on, let's say on a Monday. This is a first day of the month, but let's say it's any average day. You look at the chart, do you always have two time frames open at the same time?
So to be honest with you, these charts I'm using more for the analysis side of things, because I think the higher time frame, it's difficult for me to give analysis on the 5-minute chart when I'm not trading until 2:45. You know, it's almost a pointless exercise because the market condition now is not relevant to where I'm going to be trading in an hour's time, say. So the 4-hour chart really for me is an idea of getting those key levels marked out. Where might we have some support and resistance? And it's a way of me going, okay, this level is of interest. On the lower time frame, when I'm scalping the market, let me see how price is going to react to these points. So it gives me those few key levels without having a strong bias in either direction. It means, okay, if this happens, this might, we might see some support resistance here. But as those who know me, I'm very much trying to keep it dumbed down, not have any bias, not overcomplicate things, and then just approach the market as of market open. So yeah, that's my approach. The reason I have the two charts is obviously 5 minutes is more relevant during New York Open, obviously interesting from my perspective as a scalper, but the 4-hour allows me to open up that time frame and really look for those levels that might have strong support and resistance. But as you can see, my charts are pretty much bare. I mean, there's nothing on them. It's just down to me to understand exactly what I'm looking for. I've done it long enough to know those support and resistance levels that I am looking for. So.
And for those who are not, in this as long as you are, could you tell us what levels, what are the support and resistance levels you currently see, for example, on the H4? We understand you don't need those levels anymore, but for those who are, starting off and they want to see, okay, what is the level? And perhaps they, in the chat, they might have some question for us, like, why is this a level? Or how do we get to the level, etc.
Okay, so
what? Yes, go ahead.
A good example of what we saw was here actually at 21,020, give or take. We saw this wick here from Friday the 23rd to the week prior, and then we've seen how price has just come down and rejected. And it's perfectly bounced off this area. Another area that I can think of right now that we may see some rejection if we get down to it. Whether we get down today or not is another question. Possibly not. But this level here, so I'm looking sort of the 900 level. As we can see, we've had a few wicks here. This is sort of price coming back down into that lower area here. More relevant to what we might see in the New York session. We're seeing a little bit of a downtrend here. We've seen that price has rejected here at 252, and it's showing that potential continuation. And often we see these big wicks get run, and for me, that's potentially something we're looking out for. Again, that's a 200-point drop. If we get a continuation of volatility that we saw last week in the tail end of the week, we may see that today. It could be likely. So we're potentially, in my opinion, we're slightly seeing some resistance here. A key point for me is going to be if we run 280s level. 280s, that could happen, first candle the market opens. So, but right now I could see a potential move to the downside on the 4-hour chart. So that's sort of what I'm looking for. But I'm not getting a huge amount from the 5 minutes right now. And yeah, this is very subjective. We've seen how we've bounced this sort of 35 level, 30 to 35 level twice now. We've actually come down into it a few times. So if we break through that, I'd like to see a continuation down through sort of 900s. We may see a level of support here for a rejection, but obviously that is subjective to how the 5-minute chart shakes out. And yeah, if we get down here today, which to be honest, I'm not sure if we will, but this would be an area down at the sort of 910s that I'm interested in.
I understand that. Thank you, Josh. That's nice. What is it that I'm still we getting to know each other? The viewer are getting to know you as well. The way you trade, what kind of they know by now that you're a scalper. But what is it that, if you would say in a couple of sentences, what is it that make your trades profitable? What is it? Where's your edge? What are you trying to capture in the market when you scalp?
Yeah, so I'm trying to capture those trades that I've identified as very high probability for the trade, for the amount I'm looking for. So those in particular right now are wick tests. If those who don't know what wick tests are, if we're seeing a trend in the market, say we see price break the high and then it comes back down into that prior high of the previous candle, this seems to work best on the 5-minute chart for me, as I found. I'm sure it may work on maybe 15-minute, 30-minute, but for me, what I found is the 5-minute chart is the best for short-term wick tests. I found that I don't have to give those a huge amount of wiggle room. They usually play out instantly or they don't. It's one of those trades that when I'm looking for 10 or 15 points on a trade, you usually see that play out fairly quickly. So that's the number one trade really that I'm looking for. In an ideal world, I take that sort of trade around levels that I'm seeing of support and resistance on the higher time frames, so that I've just got that added confluence in my decision. But yeah, wick tests are the primary foundation of my trading, because I've found that they are most suited to my strategy of literally just base hits of the market, just taking away small amounts and with a high probability. So again, as I mentioned last week, a lot of my strategy is sitting on my hands, because yes, it's all well and good being a scalper. You might see loads of opportunities in the market. You might think, yes, I can take 100 trades in an hour, but it's also important to remember that as a scalper, you can get burnt very quickly if you're not focusing on the quality of your setup. If you're just taking trades here and there with no real idea as to your risk or what you really should be looking for, you can find yourself taking way too many trades. And come the end of the session, when you've lost or blown your account, you look and go, I could have scrapped half these trades because they either weren't in my strategy, I was trading at the wrong time, or I wasn't following my plan to the highest standard that I should be. So for me, I mentioned last week as well, I'm looking to take maybe 3 to 5 trades in a session. And that's not a lot relative to the timeframes that I'm trading as a scalper, because there could be a trade every 5 minutes. For a lot of scalpers, you see these scalpers online that can take loads and loads of trades. But for me, it's about scalping. Yes, okay, I might be in and out of a trade in a matter of minutes, but it's about the quality of those setups, so that I can be highly convinced that that trade is going to suit my strategy and will have a high probability of success.
Awesome. So high probability wick test. That's basically what you're looking for, and ideally areas which are in confluence with higher time frame. Makes a lot of sense, Josh. Another thing you mentioned, risk. What is your risk management? What would you tell someone looking at our stream today and they want to be a scalper? Maybe they are already trying it out. How should they approach this? Let's say they have I don't know, $500 to their name in one account to trade and to train on the real markets with scalping. How should they approach risk management in your opinion?
Yeah, so I think it's a different concept to traditional risk management with like you see traders going for a 1 to 2 or a 1 to 3. It's difficult to do that in scalping because you can't always have massively predefined expectations before you're entering the trade. You have to execute based on the information you're provided at the time. For someone with a $500 account, it's going to be fairly difficult to scalp the markets because I'd always recommend going in with a low amount of low position size and just get used and build confidence in scalping, because that's something you need a lot of. You need to be confident in your execution. So for me, what I typically do is I set out a risk for the day sort of parameter, which gives me a peace of mind before I start trading that, okay, I'm going to risk X amount. But on a trade by trade basis, I'm going for like a 1-to-1 because my win rate is sort of 75 to 80%, which means that I can have the same risk as my TP on almost every trade, and I trust that in my strategy, as long as I'm taking the same, high quality setup, I'm going to be profitable over the course of 10, 20, 30 trades. But for a scalper with a relatively small account, you have to block out any noise of high leverage, high intensity trading where there's potential to make a lot of money. And instead, you've just got to focus on small size, build confidence, and build conviction in your edge. Because without confidence in scalping, it can be a very difficult environment to trade. So I think that would be the best approach. But don't, relative to what trades, what time frame you're trading, I don't risk more than in general volatility. I don't risk more than 10 to 15 points on a trade, and that's typically what I'm targeting. As I mentioned last week, there are instances and rare instances where I will open up a trade a bit more. In the last couple of months, we've seen an increase in volatility with what Trump's saying and everything. And for me, it's about adapting to that day by day. We don't know what Trump will say. We don't know what market conditions we'll walk into tomorrow. There may be increases or decreases in volatility, but as a general rule of thumb, I am trading for 10 to 15 points profit. If I can't execute a trade with that sort of stop loss, so often the market will be so volatile where we're getting 50, 60.5 minute candles, it's better for me to leave the market than try and adjust my strategy to execute, because I know that over the long term, if I leave those trading days and just go, you know what, this isn't the market for me, this isn't the market that I thrive in as a trader, I'm going to leave that and come back the next day and get ready to execute.
Awesome. So basically, if we summarize it, you say to choose a risk, an amount you want to be risking per day, right?
Yeah.
So have a max risk for the day, a limit. You trade 1-to-1, meaning the reward you're going for is roughly the same as the risk you're taking on that on every trade. Your win rate is around 75 to 80, and you also said that you're risking about 10 to 15 points, and since you're trading 1-to-1, that means that your TP or your profit that you're eyeing is also 10 to 15 points. Another question, I think, so and how much should a trader, in your view, risk of the balance, or how should they approach that? Because let's say someone has $500, how much should that daily risk be? Or what can you say? What can you guide? What can you give us?
It's a difficult one. It's a difficult one because an account, honestly, my recommendation to someone who has an account or has that amount of money that they want to put in trading is go to someone like the 5ers, because you can amplify your capital. That would be my first recommendation, just to give you that added leverage and that account. However, if you are going to trade a live account with $500 in, I wouldn't probably be risking more than $30 to $40 in a day. And that's quite a lot, but you have to work on the basis that if you've proven that you have a high win rate and you can be profitable across the course of a lot of trades. And yes, I saw a message from Fabian Daniels. I don't know if I can bring that up. I haven't learned the ways of this yet. Yes.
This one?
Did you do that? I clicked on it, I think, at the same time as you. Scalping confidence comes from lots and lots of backtesting, and when you're ready, you backtest even more. Yeah, I'd also go as far to say that traders who are trading demo accounts or whatever, or evaluations, and they're trading it as if they would a live account or a funded account, you have got to get that real market experience, because a lot of traders do a lot of backtesting and a lot of video watching of education, and they overconsume content. I think that the confidence comes from conviction in your ability, and that comes from a variety of different things, from real market exposure, backtesting, and sample size. Sample size is the biggest thing in trading, especially for scalpers, because you need a lot of data in scalping to understand if your edge is competitive. So yeah, I think the risk, trading, we spoke about this again last week, but trading is very personality based, in my opinion. If you're a scalper, you have to be willing to accept to lose fast, to potentially enter high drawdown in some instances, but you have to have that sort of personality that is very much sniper, fast decision making, fast execution. Because if you're not that type of person, you're going to struggle in a scalping environment, because it's often more intense than traditional trading, and you have to be willing to open yourself up to that different market condition.
Awesome. So you mentioned $30 to $40 on a 500. I mean, just as an example, I mean, it can be whatever amount, of course. That turns out to be 6 to 8% as a daily limit. Is that something? How should they?
Yeah, I think the difficulty with that is with scalping, it's hard to risk a small amount unless you're going in at really small size, like really small. But the problem is with that is so many traders, they open up a demo account or they open up a small live account and they put a few $100s into it. The issue with that is the amount of profit you could generate is often very small, and traders often see the reality. They see people on social media doing massive trades and they almost feel the need to push it, and they feel they get misaligned with the percentages of their trading. So I do think it's going to be difficult for a trader to trade an account of that size in scalping. I feel like it's going to be a difficult environment. But yeah, it all comes down to your risk tolerance. Look, every scalper is different at the end of the day. Personally, I wouldn't entertain trading an account of $500 as a scalper, knowing what I know now. But if you are willing to get into scalping and you only have a $500 account, my advice genuinely would be just trade the smallest size possible and still focus on getting those X amount of points that you're looking for in a trade, and just build conviction. As you build, you can risk more. You'll understand your risk tolerance. You'll understand what happens you'll understand the key factors when you're not doing well in the markets. So when you're not seeing it clearly, and you'll be able to adapt to different market conditions and eventually grow that capital. But initially, just trade very, very small size, because you don't want that pressure as a scalper of potentially risking your account at a time. You want to be having that peace of mind that you can go into the market knowing you're not risking your account, and that you can just trade small size, build confidence and build conviction in your trading, and get the data that supports you being a scalper. That's going to be the most important thing.
Awesome. I think that's sounds very reasonable, Josh. From whatever amount you choose for your daily limit loss, do you divide that by a certain specific number? You say, I divide that by 10 or 20, and that's what I'm going to be risking per trade? Or how do you break that daily allowance you have into individual?
It's taken case by case. I don't have a fixed risk because I don't know if I'm going to take that amount of trades in a day. I don't want to limit myself. If I have a $500 loss on the day, I'm not going to divide it by any specific amount, because I feel like I'm limiting myself on that first trade. I will look at the opportunity in the market. If my first trade might have a risk of maybe $150 to $200, I'll trade it accordingly. I work on the basis that, with a higher win rate, I'm not often exposing myself to high drawdown off the back of the first trades. But typically, I've found that in my trading, if I have 3 losses in a row, that's 3 strikes and you're out. A lot of traders have that sort of rule. For me, I try to aim to have those 3 trades in a row. If I do lose those, I still aim to not have hit my daily loss. I don't want to be exposing myself to that risk unnecessarily. It's almost there as like a framework of, I've looked at my data as a scalper, and I've gone, if I go past this point of P&L, mentally I struggle, and I think that's important because again, it comes down to my risk tolerance. I've seen myself, you know, I'll be able to bounce back and trade clear-headedly after a 200, 250 loss. But if you're opening yourself up to too much risk on that first trade, it's an indication that something's not quite going right, and it impacts your mental ability to execute at that next trade with the same standard. So I think, again, it comes down to you as a trader. If you have got a very fixed amount of trades that you're taking in a day, by all means, divide the risk up. If you've worked on the basis that over a long period of time, you take an average of X amount of trades and you typically don't risk X amount, you know, more than that. That's sort of what I do, in the sense that I know roughly what my trade risk is. Therefore, I can use it as a framework for my approach into the market. I typically don't want to risk more than $150 on a trade. That's my general rule of thumb. So for me, if we're seeing a decent push on NASDAQ, I'm just seeing back into that 280 level. It's flown by. I haven't looked at any timing. I was like, whoa, 2:30 already. Yeah. So for me, I've sort of lost my train of thought after seeing that. Yeah, for me, I have a rough guideline of the amount of risk I want to take on a trade, and I can use that to adjust.
Yeah. You were saying that you can either use your data to see the amount of trades you typically trade on a day, and divide that the daily limit by that number. Let's say it's 10 trades you typically take in a trade, and on a day you divide your max daily loss with that 10 in that example. But in your case, you said $150 because that's what you already know your flow, and you don't need to calculate that on each day. But we have a lot of action on NASDAQ. Maybe you can talk us through from what are you seeing as a scalper? Is there anything calling your attention? Josh, trade me, get into the market. Is the market calling Josh or not?
Okay, so right now we're still sort of sat in this little range that I was talking about, sort of like that 120 low here, and then obviously the highs up at 400. For me right now, we're sitting in a position, there's no trade opportunity here. We've just seen a massive push. Obviously, market open. As you'll know, I don't trade the first 15 minutes of the day. That's because I like to get 3 5-minute candles out the way to understand what the market's doing. Often we'll see that big push like we've seen today at open, and then the candles after that are really a way of seeing, okay, is the market going to retrace? What sort of day are we going to get? Often on news days where we have news later on in the session, we just see slow grind days, which for me as a scalper makes it quite hard to enter trades. The opening candle is just under, well, it's about 80 points, soon to probably be, if we get up to 345, it's looking to be a 100-point opening candle. For me, these wicks here at 390 are quite interesting to see if we can break through that. But right now, I'm very much waiting to see if we break the highs, up at sort of 420s, 430s. But right now, obviously, in these conditions, there's no trade on for me because I'm not seeing either a wick test or a key level on the 4-hour chart, or the 15-minute. Sometimes I look at the 15-minute, but obviously, if there's no trade on 15, 5 minutes is often not a trade on 15. So I'm steering clear of the market for now, but definitely looking for opportunities if we get up into that 420 level.
All right. So as the market is developing, it's showing giving us data on price action, and we're waiting for a possible, maybe an opportunity or not that you could be showing us. Let's ask. I'm wondering another thing about your system, Josh. How did you come about with your system? How did you develop? How did you come up with that, with your way of trading?
So this is a very interesting route because obviously you'll know I'm quite young and my family have been involved with the financial markets. So my route into trading was very different to a lot of traders in this chat and a lot of traders that I know as well. My route into we're seeing continued push here. My route into trading was very different. I was watching my stepfather trade. That was my route about just over 5 years ago, probably. And I was watching him trade, and he was actually a swing trader. So initially, but he did also, he had a portfolio of trades. Some trades he was running for a longer period of time, but he would look at the lower time frames. And he was a bit of everything, jack of all trades trader. He's done very well for himself. but I remember sat there watching him. And initially, my first reaction to trading was, this is so boring. That was my first reaction. And he said he saw, I don't know what he saw in my potential, but he saw something, because he didn't give up. And he always said to me, I'm going to persist with this because I really think you've got the potential. I don't know what that was. Maybe we need to speak more about it. But for me, I was watching him, and I liked the intensity of the market. When I had my first brokerage account, I think everyone deposits the minimum amount first, but I eventually built it up to around £1,000, so $1,500, say. And I was swing trading. And the issue that I had with that, which is also probably why I moved more into scalping, and I just didn't like holding trades overnight. I didn't like the stress of it. I didn't enjoy it. I found myself not being able to switch off, and I think that can be the case. And for me, knowing that, I'd look in the middle of the night at market open because I want to check on the trades, and I just wouldn't be able to remove myself from trading. And the weekends as well, I didn't enjoy the weekends, because bearing in mind, this is when I was new to trading. So if I was approaching swing trading now, it'd probably be a bit different. But I didn't enjoy weekends. I didn't enjoy Friday night close, not knowing what the market was going to do. Because if something happened over the weekend, I remember I'd look at the IG brokerage, because it had a weekend market price. And I remember looking at sometimes it was down 150 points and I'd be in a long, and I just didn't like that. So I went from one extreme to the other and went, I'm going to be out of trade in a matter of minutes because I really don't want to be attached to them. So I think I experienced opposite ends of the spectrum, and that allowed me to really understand exactly what I wanted from trading. And for me, that is be out of trades, fast execution, move on, and just back myself and just have the confidence in every trade that I know what I'm doing. I have the data to suggest I know what I'm doing. So I'm just going to keep it as simple as that. Focus on my execution, leave the market, restore that emotional capital that traders need, and come back the next day replenished.
So that is the reason why you went to the lower time frame with a shorter holding time duration,
Yeah.
which you didn't want to have that stress or headaches with holding the trades overnight and especially during the weekend. But how did you come up with your scalping strategy? Because what you're trading with that wick test, for example, you said that's mainly what you're doing.
Yeah.
Did you learn that from your stepdad? Is that something you were?
I don't know the immediate moment that I'd come across it, to be honest with you. I would have assumed yes, probably. I remember I used to have Bollinger Bands on my chart, amongst other things. I think all traders started out with everything on their charts. But I'd often see rejections off the Bollinger Bands. So my only assumption that I can make, because I got that from my stepfather, the only assumption I could probably make around where I first thought about wick tests was, if we're seeing a price rejection here off this level and this marker, then would that apply to other areas of trading? And I went right down to candles. Okay, do we get rejections off the candle wicks? And we did. So maybe I didn't really watch YouTube videos when I was starting out, so I can't really pinpoint someone that I watched that did it. But I can assume that through a lot of experimentation across different timeframes, I probably just sort of figured it out and went, okay, this could be something to look out for. But really, like I didn't watch a video. I didn't have this light bulb moment. I think it was more of I tried a lot of different things in the markets and just got a lot of screen time and placed a lot of trades on demo and small brokerages accounts. And then I gradually sort of came to understand what my edge was and what I was looking for in the markets. And yeah, ever since then, I found that to be the most suited to my trading strategy. We've pretty much seen, we're 20 points off seeing a run of these highs here. So we've got the move up, which is interesting.
Yes, your price has basically jumped out of your chart on the 5 minute.
Yes, yes, I'm adjusting it. Yeah, so
go ahead.
Yeah, I'm just saying that again. Are we seeing slow grind price action open at 244? So nearly just over 150 points up. For me, seeing a candle like that from 350 to 412, that is exactly what I was talking about 10 minutes ago, saying if we're seeing this kind of volatility, for me, I'm sitting on my hands. I'm waiting. I know that I don't do well trying to trade this high volatility relative to my strategy. So for me, yeah, I mean, we might see 420s here, but I need to see a reduction in pace in the market. But again, there's no wick test. I mean, it's important to add that for a wick test for me, people might go, oh, there's a wick there. Is that a wick test? No. Typically, a wick test is around 50% of a candle. So I'd be looking for a decent wick test here. Problem is, I wouldn't take a wick test in this environment anyway, because we may just completely slap. And yeah, again, high volatility is a no for me because it's a difficult one. I'm not seeing, I mean, let's see how price rejects, but I'm not seeing anything here that is blowing me away.
What do you mean by 50% of the candle, the wick test? The previous candle, let's say not the previous candle, like on your 5-minute chart, not the previous candle, but the one before that big one. Is that wick you're talking about, and that needs to be 50% of what, of the next candle?
Yeah. So for example, if we've just made this move here, and then the next candle we're coming down, I'd be looking for this wick here to be 50% of this candle. So I'd be looking for price to come into that, because that's what I've found, that if you try and take a wick test too low to the low of the prior candle, it often isn't as convincing. So if I can get a 50%, it gives me, okay, we're in a grinding day currently. So, you know, but again, I haven't seen that, and it's too early for me to make a comment. Because when I see the 5-minute chart like this, it's an interesting environment for me. But you know, we just did we fully break 420s? 428 was the level we got to 4, so we're about 10 points off. So yeah, I mean, the 370s is interesting, but yeah, it's a bit of a gamble because we've had quite a heavy sell there. So yeah, I mean, we'll see how price reacts. Whether we get a retracement of this candle, I don't know, but let's see. Jonathan's saying, let's get some trades in. That's moving. Yeah, and what I was always taught is just because the markets are moving doesn't mean there's a trade. I've got to maintain my confidence in my execution. And if I'm not seeing anything, there's no trade for me. Unless people in the chat want me to demo trade and completely fling trades about, you know, maybe. But for me right now, this isn't a market that I want to be executing in with my own risk. It doesn't align with anything I'm looking for at the moment. So yeah, we will. I know that someone was talking about Saul and LJ, because I know Saul's a scalper, and I'm assuming, I haven't met LJ before, but I'm assuming he's a scalper. So maybe we will see something. I believe Saul is here on Wednesday, so if so, I'll make sure I'm here, and we may see some action. Who knows? Let's see. It could be quite exciting to see a little trade off. But yeah, let's see.
Yeah, I think our viewers will be delighted to see, you know, a little scalper among each other, among themselves, trading against each other, see who gets the best entries. One question, Saul, for those who our viewers who have been watching our stream already, it takes a lot of trades, right? It can take multiple trades in one idea, one setup, and he can take even while those are open, he might open, you know, more trades, and he closes them, he manages them. I think he says he fixes them. But how is that for you? Is it one trade in?
Yes.
And you don't open any other trade until you open until you close that first one? Do you move your stop loss? Do you average into a trade? How do you manage your trades as a scalper?
No, I don't ever take more than one trade at a time, because I feel like it can be quite dangerous. Yes, it may work sometimes, but in the moments it doesn't work, I don't like to be in multiple trades. I like to focus on the trade that I'm in. My stop loss, I don't like to open up a stop loss, because if I've come in with a 10 to 15 point stop, I don't like to move that, because I feel like the instances where I have moved a stop, because I've gone, oh, we might bounce this level, you know, stop hunters, we might bounce this level and we might go a bit lower, but the moment I do that, often the first stop loss I put in is where I'm going to be wrong on the trade, at least for my strategy. The moment I move that, I'm just opening myself up to more risk. and then if it hits stop loss, I'm going to go, well, I just opened up myself to half as much risk again, or another 100% risk for no reason. So for me, again, the simplicity of my trading is the fact that I'm focused on one trade. That outcome of the trade is predefined by my take profit and stop loss. I'll just deal with that trade as it comes and execute.
And do you manage that trade actively, or do you just wait, set and forget? You wait for it to hit either the stop loss or the TP?
I do wait, because I don't think as a scalper there's not enough time to manage the trade. From what I found, my trade duration, as you'll know, is very low. It's very very short trade duration. So managing my trade doesn't go much further than hitting take profit or stop loss. It happens very quickly. So there will be instances where I will kill a trade before. Sometimes I put a break even in. If I've been waiting a bit longer for the trade to play out and we go into profit by 7-8 points, I'm going for 10, I'll put a break even in, because if I'm not there, see, this is interesting. This is where the wick test. This is the wick that I was pointing out, but
okay,
I don't.
Could you zoom that in for the where exactly? What are you looking at? And could you perhaps zoom it in so that the viewers could see the wick exactly that you're talking about?
Yeah. So this isn't a wick test, but this is the wick that I mentioned a bit earlier.
Okay.
What we're seeing here is a potential rejection. What I don't like about this is it feels like a bit of a jumping in front of a trade situation. And I make that comment when we've seen a massive move up with no pullbacks at all. And then, okay, there we go. If I'd taken the wick test, I would have been stopped out. So that's a good example of why I don't have a stop it. I wouldn't have a trade in it in this sort of environment, because we could very much retrace this just as quickly as we pushed. And there is no definition of a stop. Okay, aside from maybe 354, so hypothetically could have placed a trade at 17 and had a stop loss below there. But this seems like a free fall for me, and it feels like I'm just opening myself up to an instant stop loss. So that's a good example of where traders might go, oh, there's a wick, that means it's a wick test. No, in an environment where we've had a massive push, I'm not going to just buy that because I see a small opportunity. I'm going to wait because we've seen such a strong move. I need to be patient. As a scalper, I keep reiterating it to anyone who's interested in learning to become a scalper. You've got to be so patient because you can, especially traders who go down to the 1 minute chart, for example, the 1 minute chart can be really dangerous because there is always a opportunity somewhere, whether it's a quick bounce off a wick, which I wouldn't define as a wick on the 1 minute, by the way, but some traders do. And they're the traders that take a lot of trades. They do take a lot of trades. For me, I don't personally like the 1 minute, and I don't trade off the 1 minute. I mean to say, because I do look at the 1 minute, but I would never look at the 1 minute directly and go, I'm going to trade that. 1 minute is always let's understand the trend in those 5 minute candles more than anything. Where are we seeing the trend go? There we go. See, had I placed the trade, there you go. That's a good example of it's a complete free fall. We never ran the 428 levels, I noticed, and we've slapped a decent whack off that. But yeah, for me, this just seems like I'm buying. I'd be buying that into nowhere. So yeah, let's see. We may get a retracement all the way down. I don't know, but I'm very much waiting in these market conditions. It's not right for me. Victor, is there anything you're seeing? I want to throw it back to you to learn a bit more about your trading. What are you seeing?
Of course I have. Of course I do. Let's look at there's someone in the chat. Harish is making some jokes here. Let's also suspend Jonatan for giving too many giveaways. Of course, Harish is referring to last week. We were celebrating 70K subscribers, and Jonatan went on a rampage and gave out so many giveaways. And we're growing, so it can happen again. So subscribe to our channel, and soon Crazy Jonatan would come again, and a tsunami of giveaways. And here he is as well, referring or responding to that comment. He went berserk with those giveaways, which is awesome, because we want traders to be trading, to be testing out our very the best trading conditions. I'm not afraid to say that we, as a prop firm, we have one of the very best trading conditions. Trading the dollar, the pound, dollar, GU, EU, and basically all pairs, they're very close to zero. EU and GU are zero most of the time, and all the other pairs are very, very tight. I mean, the tighter the spread is, the easier it is for you to trade, because spread is a cost, right? So the lower the cost, the more profits for you to keep. That's awesome, Harish. Harish is one of our regulars in our Discord as well, and on the YouTube, as we all know. All right, let's look at the. I'll break down the EU, or actually I broke it down already. But since we don't have any trades on, I'm gonna switch back to my screen, Josh.
Yeah. I just want to quickly jump to the UK swing trader real quick, just to answer his question. So my focus is on high probability, not profitability. Yeah, and I think that should be the case for almost every trader. Your initial trading journey is not about profitability. It's about whatever account you've got or what amount of money you've got invested into trading. Keep the money. So many traders, they blow up because they try and push it. Yes, focus on probability and proving your strategy before focusing on any amount of money, because no amount of money you make with a small account will be justified to the amount of time you've put into trading. You would be better off getting a job earning minimum wage in your country than trading when you've got a small account. That's the reality, and that is the sacrifice and the process that every trader has got to go through at some point. You can't expect to jump into the markets and go, right, I'm ready to make £1,000 a day. I know everything I need to know and I'm ready. You've got to learn. You've got to go through that process. This is why so many traders don't make it, is because they get the order of execution wrong. You need to focus on proving your concept, growing, scaling, and maintaining that edge in the market, and refining that edge when you need to, and being able to adapt to different market conditions. So yeah, absolutely. My advice is to focus on probability of your setup, quality of your setup, and your general mental approach to trading.
Yes, I think that's you have to see it as when you open an account of 500, as an example, it's actually just a training account. You're not going to be living off of that account. You can be very profitable, but it's not taking small accounts and putting high risks to them. That's not how you build your trading success. For those who are wondering and missing Jonatan will be back soon, tomorrow at least, and who knows, maybe even tomorrow, because we are already at the 8 minutes from our of the end of our stream, and we have NASDAQ retracing almost everything it created. Or
this is what I said. This was my concern with any buys up near the sort of 400s level. We could just slap and retrace that, and that is exactly what we see. So yeah, I'm glad I've stayed clear of that, and just let me watch the market play out, and we'll see what opportunities we get.
All right. I'm gonna put my screen on and look at the EU again. Remember, I'm gonna go from the higher time frames in the last 7 minutes we still have from our streams. Remember, guys, if you like today's stream, you like Josh, what he's been talking about and teaching or showing what his lessons, how he became successful, how he is trading on his end. You like that, you want to see more of that, hit the like button, subscribe to our channel, and we will get the message then to keep doing and creating these contents for you. On EU, let's look from very quickly. I'm not gonna spend a lot of time. There's nothing here on the monthly time frame. I already broke it down, but I'm gonna just very quickly from the top down. We see there's bullish order flow as well as bullish market structure on the weekly time frame, so you know what the macros are doing. We go into the lower time frames. We are currently in a bearish order block on the daily time frame, this one, but as you can see, it is after we're coming from a weekly order block that was created, and a succession of daily bullish structures that were also created. You got one here, another one retested and created another one, and last Friday we had a retest of that order block, and today we're showing We'll still have to wait to see if it prints in the end as a bullish engulfing to create another order block. But this means that you have multiple structures being created, bullish structures in a succession, and you only have one, at least in this time frame, one reason to think, okay, the market might getting some selling. And I would assume that these sellings are probably just for today coming in, if they are even coming in, because they are really with their back pushed to the wall. We'll have to see at the end of this day to see. It's too early to say anything, but at the end of this trading day to see if we close above this structure to invalidate. That would absolutely break the door open for higher prices. But even if we don't, the balance is the bias is to the upside. The balance, we have multiple structure, as I said, telling us that we're likely to continue to go higher. All right, so let's go to the H4. There's one thing I want to mention, the daily ATR. I know we have in about 5 minutes, we have the PMI, manufacturing PMI coming in, 4 minutes and 31 seconds. And later on, we have Powell speaking. These things can, of course, move the markets, these events. We currently already have 90 pips travel during the day, and the ATR is at 94. I did it very quickly, but you can see it on the lower left corner right here, 94, meaning that we're very, very close to the average for this day. There's some news coming in. Maybe we can expand a little bit, but I wouldn't expect too much from it, meaning we already did today's move, the day's move at this moment, meaning, along from here isn't very recommended, if anything, because you are we do have the daily order block that is a bearish structure. We could see some selling push coming in, and I would be actually wanting to get an entry if it, if the alignment is there. Now we'll see if that's happening. Going to the H4, we do see here we close above that order block, that the previous swing high. And that's another indication that the market doesn't hesitate and taking out these levels, right? It doesn't come and leave a big wick for the first time and leave another big wick for the second time, and to then maybe on the third or the fourth time breaks it. No, it comes in one big handle, close it confidently above that level. That tells me at least on this time frame, that the buyers are in control, and the possibilities for higher prices, probably not today necessarily, or maybe not much higher, but in the eventually, even if we had some kind of retracement, I expect prices to continue to go higher, even if we do have that retracement that I just mentioned. What else do I see? We on this time frame on current price action, there isn't anything actionable, right? I'm looking for these order blocks, right, for price to come back into them, because these are demand areas. If and when it happens, that's where you want to be going long, at least looking for a long. Josh, if you see this, I know you're not looking, typically don't look at these time frames for your entries or setups. These are higher time frame for you. But if you were to look at the this price action, right, actually just this part, and if we zoom out mentally in terms of time frames, what I just suggested people waited for, and for that continuation, how would you call that in your point of view?
Yeah, so that's fairly similar, I suppose. Obviously, order blocks slightly different to wick tests.
Exactly. That's exactly what I was referring to.
So yes, so I can understand that. To be honest with you, I agree in the sense that at the end of the day, if you're looking on a higher time frame, you're looking for a continuation of the trend. You're looking at where could the market retrace to get a continuation of that trend. So yeah, I actually think the area that you've marked out is interesting for where I'd be looking at. I might be looking slightly higher, maybe at those wicks, sort of, or the previous one, just before, the one before the red candle that you just marked out. So maybe around that level potentially. But yeah, I can understand that sort of level. I'd also be looking in the same way for that continuation of trend. So yeah, it's an interesting comment you make, because people do talk a lot about order blocks and wick tests, and there's a lot of conversation about that.
Yeah, so basically what I was going for is that I'm looking for some demand area to get in so I can define my risk properly. And if we were to zoom this out, I don't know exactly. I think we lost Josh there. He probably is going to reconnect in a short while. There you are. I'll put you back. We had a little bit. There we go.
I seem to have clicked a keyboard shortcut and it booted me out. I won't click that.
That's all
again.
fine.
I've learned my
No
lesson.
problem. If we were to zoom this out, you can clearly see. Let's mark this. I just saw this right here. That 50% retracement of this candle, you can see, is at 92, and that's not very far from that wick. So that's exactly what I was looking for, because this looks that would be, from what I understand, what something you trade only on the 5-minute, but that's basically the concept where it comes back 50% of that last candle into a wick, and you get in and go for your designated amount of pips. All right, so going back to what I see is we are breaking with confidence that level on the H4. It's obvious that the buyers are in control, and I would be waiting for price to come back to this area to get long. Obviously, that doesn't seem like it's going to happen today. And personally, I wouldn't be trading anything unless we close as a bullish engulfing, and we get something like this where we currently have that. We would then, not currently, but by then we'll have then a demand area firmly. And if actually it could actually also be a outside bar, I would be taking a long from there, but it's not there yet. It's only showing. It's not printed yet. We have a possible on the 2-hour, a possible bullish order block being created, which is actually an outside bar. But you don't even need that order block or outside bar creation to know that who is in control. Look at these long, big, solid bullish bars, all telling us that it's easier, not today anymore because of the ATR, but the momentum is to the upside. It could still continue, but we're nearing 95-96% of the ATR. And perhaps today, because of all the news that we're coming up this week, we could expect some, a bit more of an expansion of that range, maybe going for 110, 115. That's all possible. That would turn out to be another 15-30 pips on EU. If we were to use that those same metrics, that means that we could expect price to perhaps, let's say, if it's 10%, that would mean something like going to the 1450 level for the daily range. But who knows? Maybe today could be an outlier in terms of the range, because the market is very strongly looking for the upside to continue. I would be looking for these kind of structures, but it already happened in this case to get in, and it didn't happen with the confluence of the 4-hour. So to me, I'm very selective with my entries, but that would be something that I would be looking into. If anything, I would wait for the deceleration and actually look for a fade, because I think it's the move of the day has already happened, and it's likely that the market needs some kind of retracement before it continues. How low of retracement is difficult to say, but you can, even without targeting something much lower, you can just expect a little retracement, maybe into half of that last final push it had. So that will be for us today. The analysis, the price action, the tips, tricks, and advices that Josh, the scalper, that is joining our team at the 5ers for our YouTube sessions. An open invitation for everyone. If you want to see more authentic traders, Josh didn't take a trade today, but he surely will, perhaps in the next session.
Yes. Eventually, we will see.
Eventually, he will, and he will be breaking down the markets again, right? I'm very interested. I'm sure you guys at home are very interested to see, all those little details on the 5 minutes. That little move that the candle, the little ticks, the candle does right before it closes, perhaps, or perhaps as it breaks out. All these little nuances, Josh will be able to, commentate on and let us know what his experience tells us in terms of probabilities. All right, so this is the end of our show for today. Join us tomorrow again. Josh, any last words?
Final comments. Yeah, I know a few people have been putting in the chat about where to find stuff. Link is in the description. We've recently partnered with The5ers actually to provide you evaluation accounts. So if you are interested, you can visit the link in this live video description to learn a bit more. And yeah, I think I'm back tomorrow. So I think I'm back tomorrow early morning. So those that are interested in what I'm doing, you catch me at the start of the live stream.
Perfect. I'm sure they'll be waiting there anxiously to see you trade and break down the market again. Josh, thank you for joining us today on the stream. Everyone at home or wherever you may be, thank you for watching. We really appreciate your participation in the chat as well. Don't forget the like and the subscribers button. It's all for you. So I hope to see you tomorrow again. Bye-bye.
Bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all go into the YouTube and check our other content that we provide here at The5ers. We'll see you in the next one.